Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacquette today at Westminster. Yes, we also talk UK politics, and here are your top stories. Edging towards number 10, Rishi Sunak steps closer to becoming Britain's next prime minister as Boris Johnson bows out of the race. Sterling gains. Total control. China's President Xi Jinping secures a third term in office, filling the party's leadership with allies. Stocks plunged despite GDP topping estimates. And then we look at the markets. So global equity rally, that loses its shine under the weight of steep declines in Hong Kong. Treasuries climb as the yen swings amid possible intervention. So there is a lot going on. Let's get straight to Bloomberg's Christina Kino, who will walk you through the market open. Christine, what are you looking at?
Good morning, Francine. You are on the green, and it's green all the way over here at the studio as well. Take a look at European futures today. Looks like we're gearing up for quite a positive open here. Eurostoxx 50 futures, DAX futures, FTSE 100 futures, all pointing to a higher open. Let's take a look at the global macro movers today, though. Some very interesting moves here. Again, Spain equities also following that green open that we saw in the major equity indices here in Europe. Take a look at the bond space as well. We're also seeing some green there. Yields down across most global markets. I think this is primarily a story about investors really trying to figure out what the Fed and other global central banks are going to be doing after those massive rate hikes, potentially gearing up for a bit of a pause at the start of 2023. Now, looking at commodities as well, a bit of a mixed picture here. Brent down about 1% or just about there. And in terms of FX markets today, we're seeing a bit of green in a pound as well, up about 0.5% this morning for a little bit of political certainty with Rishi Sunak set to take the helm at the UK. And speaking of the pound, let's take a look at that even closer here. Yeah, just trading at 113 for cable at the moment. Again, as you mentioned, Francine, some of that political certainty or signs of us getting there with Rishi Sunak set to take a prime minister role, buoying markets here this morning. One particular standout, though, is the Chinese equity market, the CSI 300, really not liking today. I think that's primarily a story of investors questioning what it means now that Xi Jinping has consolidated power here. So lots of stuff going on here, Francine. Back to you on the green.
Yeah, thank you so much, Christine. A lot going on, especially in some of those Chinese stocks. So let's get over straight to our Bloomberg MLive managing editor. He's Mark Cudmore. Mark, I know you have a lot of thoughts, of course, on what's happening with China and Hong Kong stocks, but you're actually looking at the UK today.
Yes, exactly, Francine. You're there in Westminster, and I thought I wouldn't undermine your big efforts trekking out in the cold by focusing on China stocks. So it's UK assets today I'm looking at. And this is a chart of realized gilt volatility in recent weeks. These little circles here, back in 2016, this is the Brexit spike in realized volatility. This is the COVID spike, and here is in the recent days, and this is why we've got such turmoil in assets. Now, one of the things to take into account is that when we were at the zero lower bound in rates, and we had forward guidance kind of saying rates aren't going to raise anywhere anytime soon, it was pretty hard to get much volatility down there. But now, everything is fair game in terms of policy moves. We really don't have much certainty, and that's why we're getting such wild swings, and that's why pensions were put under such pressure recently. And this kind of plays into the whole political story. Now, there is a hope that with some political certainty by the end of the week, or maybe even sooner, that we might get some more stability in UK assets. I'm not so sure. We might get a little bit more stability than what we've seen recently, but it's not going to go back to the calm days before, because the Bank of England is continuing with QT, and of course, we still have this uncertain rates path ahead. And it's this gilts volatility that is playing into the negative sterling story. So let me show you the next chart, which is the chart of cable risk reversals. Now, what this chart shows is the premium for 25 delta calls over 25 delta puts, i.e., this is the zero line, so when it's above there, people want to buy calls. They want to play for topside in move in sterling dollar. When it's down here, they prefer to pay more to play for downside in sterling dollar in cable. Now, you can see that this is the Brexit spike. People got very, very negative, and so therefore we had a massive premium for puts in cable. This is the COVID spike. Again, there was a demand for dollars. And part of the story, of course, is the rates differential between the two currencies, but it's rates differential and sentiment. And you can see right now that we're more negative on cable than we were in COVID, and we're getting not far off the Brexit negativity in the currency. And I'm not sure on a longer term basis that's going to go away, even if we get a relief rally over the next month after political stability hopefully comes this week.
Mark, thank you so much. Mark Cudmore there, tagging on the back of our Westminster coverage. I'm so grateful, Mark. This is when you say, like, you know, dream work makes the team work. Rishi Sunak has taken a huge step towards becoming the UK's next Prime Minister after his former boss, Boris Johnson, pulled out of the contest. Well, joining us now to talk all things government and politics is our star reporter, Joe Mays. Joe, I have so many questions. Thank you for joining us. So is it really Rishi Sunak, the next Prime Minister? What do we know about Penny Mordaunt and the numbers she has right now?
Well, Sunak is the hot favourite today, but Mordaunt is at about 30 public backers, and the key question is how many of Boris Johnson's supporters come across to her today, and can they get her over that line of 100 nominations? If they do, the picture changes quite radically, and Rishi is not looking so good to be Prime Minister. But as it stands now, that hasn't happened, so Rishi is the strong favourite.
Okay, so Team Johnson says that they have 102, but I think in the public eye, we only saw 52 MPs. When do we find out the numbers?
So we'll never find out how many supporters Boris Johnson actually had, whether that was 102, because that was a private nominations process. But we will see today how many come across to Penny, and that will be public insofar as we'll find out at 2:15 whether she's made it across the line to 100. So that will be the kind of, we could find out at 2 p.m, 2:15 today, Rishi's the new Prime Minister because only he crossed the 100 threshold, or we won't, and we'll find out that Penny's done it too, and then we'll have a indicative vote of the MPs. That won't be binding, and then we'll see, does Penny carry on in the contest? Does she try and go to the membership?
And this is the million-dollar question, right? We thought that on Friday maybe there'd be some kind of secret agreement between the two candidates, whoever they may be, that the second one drops out. Is there any indication that Penny Mordaunt would do that if she came second?
My sense is if she came second, she would carry on, because I think she knows that she has pretty good support amongst the membership, perhaps even more than Rishi Sunak. So her path to being Prime Minister is by staying in the contest. I think what we should look out for this morning, though, is Penny Mordaunt coming out and saying, I haven't reached 100, therefore I am backing Rishi Sunak. And then we'll know that the contest is over, and that could be mid-morning, for example. So watch out for that.
If we do have two candidates, so there's not going to be two votes, right? Is there only one vote?
There'll be only one vote.
And then it goes to the membership.
Exactly, and they will vote, and we'll have the result on Friday, so long as both candidates stay in the race.
Joe, thank you so much. Our Joe Mays there with the very latest on how really they're kind of making it up as they go along, right? The 1922. I mean, they can change the rules, so now it's very clear what happens today and this week. Now let's bring in Bloomberg's Christina Kino on how the markets are reacting. Christine, there was a bit of a change when it came to sterling when Boris Johnson announced that he was no longer run. What's happening right now?
Well, Francine, I think we're still continuing the positivity in the pound here, and we're still seeing gains of about 0.5% in cable. I think it really is a story of a political certainty after weeks of uncertainty plaguing the markets, plaguing just the UK in general. I think investors are very happy to see some kind of certainty here in terms of the UK leadership. Of course, next question will be what is going to happen with that fiscal statement that everyone is looking forward to on the 31st of October. Questions over whether that's going to have to be delayed now that there's a bit of a transition in leadership, or will Jeremy Hunt press on and give the markets and investors the certainty that they want? That's still hanging over investors, but at the moment we are definitely seeing that sense of relief, positivity in UK markets, particularly in the pound, and really that positivity spreading across the rest of the European indexes as well. We're seeing here on the board at the moment just technology, banks, financial financial services, automakers, all up at the moment, partly because of this certainty that investors are certainly getting out of the UK, but also one of just potential relief from global central bank rate hikes heading into 2023. Also taking a look here at gilt yields, again, green across the board, yields down across the curve here from the 2-year yield all the way to the 30-year. That 30-year, of course, is very notable because that was at the heart of the pensions fiasco just a few weeks ago, and we saw massive declines there in terms of the gilt movement, and now we're seeing quite the reversal in terms of the yields here.
All right, Christine, thank you so much. Christina Aquino there with the very latest on the UK, and then we'll get on to also what's going on in China. Joining us now, Laura Cooper, BlackRock's senior investment strategist. Laura, thank you so much, first of all, for being here at Westminster. I mean, if you're a pension fund, if you're a gilt investor right now, do you assume that, so it's Rishi Sunak or Penny Mordaunt, and they're both kind of technocrats or have technocratic qualities and would probably keep the chancellor, or is that a mistake?
Well, I think at this point, the fiscal trajectory is likely going to be little changed. I think there's a great deal of uncertainty still going forward. And if anything, this is still an environment where inflation is likely going to remain elevated around that 10 to 10.5% range through January. We did see markets start to price out some of those gilt issuance risks. The terminal rate priced in for the BOE has come down. So I think ultimately at this point, probably too much uncertainty still for gilt investors in this backdrop.
So what needs to happen for you, for example, to go back into gilt?
I think it's a great question for gilt. I mean, certainly I think we would need to see a path towards fiscal credibility come through. If anything, we are in this environment where the fiscal austerity potentially is going to have the UK recession brought forward. This is still an environment where the Bank of England is likely only in the midst of their hiking cycle. If we think historically, the Bank of England terminal rate, we tend to see gilts actually peak at that rate, which does suggest there's another 100 basis points or so in the gilt market in the 10-year. So I think it's too soon at this point.
But Laura, it's a best case scenario. How long? I mean, in terms of timeline, are we talking like 2 years or 6 months? Because we're going into winter, inflation is out of control, as you say. The BOE needs to be much more aggressive.
Well, I think it's certainly, market pricing at this point is probably more in line with where we see the terminal rate, so around that 4 to 4.5% range. I think it all depends on the evolution of inflation and how the economic recession unfolds. In our view, we do see multiple contractions of recession ahead, so quite a significant backdrop for the UK. So whether that can be cleared up by next year remains to be seen, but I struggle to see that as the base case.
I mean, then we're starting with earnings, and there's a lot going on, of course, in China. The market didn't take that well, the appointment and the consolidation of power, Xi Jinping. How do you see that playing out?
Well, it's interesting. I think it's the mix of political machinations as well as this upside GDP surprise is not actually boosting confidence in China. And I think that largely captures just the uncertainty ahead, notably as investors are looking for some easing at the margin of that zero COVID policy. And until we see material signs of that coming, I don't think investors are going to have conviction, notably in Chinese equities.
All right, we'll have plenty more, of course, on China in just a couple of minutes, very shortly. Laura Cooper, BlackRock's senior investment strategist. And now coming up, we'll have plenty more on China. The future of China now lies in the hands of Xi Jinping and his all-male inner circle of proven loyalists. More on what this means for the world's second largest economy. That's next, and this is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Going well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, You'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird, a weird floaty thing right now. But
Look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open, everyone. 14 minutes into the European trading day, and this is a picture across the board. A rally in global equities that actually started in the U.S. Friday faltered today under the weight of declines of some of the Chinese stocks. You can see European stocks overall gaining 1%. I'm looking at the FTSE, pretty much flat. Now, Chinese markets tumbled after President Xi Jinping tightened his grip on power. It comes after the Chinese leader filled the country's most powerful bodies with his close allies, while also securing an unprecedented third consecutive term at the close of the Party Congress in Beijing. And meanwhile, GDP grew faster than expected in the third quarter, with industrial activity improving despite COVID restrictions and a property slump. Now, retail sales also weakened. Now, this is a picture across the board on exactly what's going on with some of these Asian equity markets. So let's speak now to Bloomberg's Asian governments and politics correspondent, Rebecca Chun-Wilkins. Rebecca, thank you so much for joining us. So what does the new lineup tell us about Xi and China's direction going forward?
Well, we've seen Xi Jinping really tightening his grip on power, placing close allies and his proteges really at the top echelons of China's Communist Party. And some of the exits by those who weren't necessarily seen to be allies of Xi Jinping did surprise many China watchers. It's even more extreme, I think, than many people expected. And ultimately, the upshot is that Xi has surrounded himself by a group of men, and they are all men for the first time in 25 years in the Politburo and the Standing Committee, who are essentially dedicated to implementing all of his policies with real fervor. And the concern is that, you know, who is going to be there to dissent or to push back when there may be a policy misstep? And that worry is being reflected, I think, in markets today. We've seen these drops on the onshore yuan, China's credit markets, as well as the stock markets, really reaching some of the lows that we saw last in 2008. So quite a profound impact. Essentially, that this cohort of men will support some of the more extreme and ideological sort of socialist-driven policies that Xi Jinping has set out over the past 2 years, which he doubled down on in his speeches, things like COVID zero and the property crackdown that have been an enormous drag on China's economic growth over the last year and a half.
Rebecca, thanks so much. Bloomberg's Asian government and politics correspondent there, Rebecca Chun-Wilkins. Now, we'll have plenty more, of course, on China. We're also getting some breaking news PMI numbers out of France. October manufacturing PMI, a bit better than expected. It is still below 50, which indicates contraction, but better than expected. Services falling, but also, well, pretty much in line with expectations at 51.3. So that's actually an expansion. Let's speak now to Laura Cooper, Senior Investment Strategist at BlackRock. Laura, I want to ask you about the ECB in just a second, but when you look at China and global growth, what we heard, of course, from the China People's Congress, does it mean that'll make it much more difficult still to get away from the COVID zero policies? And what does that mean for the world economy?
Yeah, it's a great question. I think at this point, China's probably not going to be the ballast of growth coming out of the global downturn potentially late next year that typically it would be in this type of recovery scenario. Now, that's to say, I think there are a number of frictions still ahead, notably geopolitical tensions, which is something that I think is keeping investors quite cautious, and that's something we're likely going to see feed through into earnings expectations as well.
What are you expecting from earnings overall? It seems that the consumer for the moment is holding up. I guess the worry is that, comes the first quarter, it just comes crashing down.
Well, it's a great question. I think ultimately the bank earnings in the U.S. did suggest that this is a fairly resilient U.S. economy, but I think focus this week will all be on tech. Notably, it's fairly muted expectations. Estimates have largely flatlined, but I think investors will be looking for, one, the scrutiny of margins. We do have higher input costs. We do have the geopolitical tensions, this dollar strength feeding through, and as well, I think markets will focus on business spending expectations. It's clear consumer demand is slowing, but so far we have seen pockets of tech like software, cloud computing still be fairly resilient in that capex, and I think we'll be watching for signs of whether they do see cracks coming through that could kind of put a dent in some of these earnings expectations.
Laura, we're also getting that breaking news from PMI data out of France. Services a little bit lower than, actually a little bit better than manufacturing, and then we have Eurozone and the UK. What will throw the ECB off course, if anything?
Well, I think for now, certainly when we look at this Thursday's meeting, a 75 basis point hike is largely in the price. We think they'll follow through with that. Anything less will be perceived as dovish. Notably, when we continue to have underlying upside inflation surprises, I don't think they're going to have the so-called pause or pivot just yet. And I think, though, ultimately by the end of this year, as we start to see more of these data deterioration being confirmed, that will pivot them from this inflation side of the mandate more towards the growth mandate. So we do think there is scope for the ECB to pause this tightening cycle well ahead of the U.S.
And are you expecting consumer confidence to really be hit quite hard?
I think we're already seeing that in terms of Europe, and I do expect that that's going to be the case. I think, if anything, though, the energy crisis so far is proving to be less of a meaningful risk. Notably, we look at storage levels are quite elevated above that 90% range. But the key risk, though, is around, will this be a normal weather-like conditions this winter? And I think we are still going to see further strains on the European consumer. So that's going to be a key headwind going forward.
When you look at the markets overall, and we saw that a little bit with liquidity concerns, you had to be, but it left because they were also interested in euro yen calls. When you look at what we've lived through so far, I don't know whether Japan is one of the most interesting bits that maybe global markets don't focus as much as they should.
Well, certainly markets were focused on it last week when we had the moves that we did in USD JPY. I think going forward, though, it's really a case of how long can the Bank of Japan continue on this yield curve control policy, notably given the fact that we did have the currency pair break above that 150 range. But I think it does suggest that Japan remains a net seller of U.S. Treasuries. That's amplifying these liquidity stresses that we are seeing in the U.S. bond market at the same time that we are seeing this removal of liquidity in the U.S. And I think it's interesting that some Fed members are starting to allude to the fact that these market stresses will take more prominence. The U.S. Treasury is suggesting they could have a buyback program in place. There's a number of different things happening under the surface that suggest there are things to watch for on the radar.
But do you worry about liquidity overall in the markets, or certain pockets in the markets?
I think certain pockets in the markets, yes. I mean, just looking at the U.S. Treasury bond market, I mean, the fact that the liquidity is the tightest that it's been since March 2020 peak, I mean, it does suggest that there are stresses that are occurring. So I think it is concerning, but this is just the new regime, right, after this period of great moderation.
Laura, thank you so much, as always, for joining us. Laura Cooper, their senior investment strategist at BlackRock International. Now, coming up, we'll have plenty more, of course, from Westminster. Also, investment banks take center stage as earnings season gets underway in Europe. We'll discuss what to expect next. This is Bloomberg.
is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then betray you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Hello, I'm Emma Barnett, and I'm a journalist and presenter. This is my new show, Emma Barnett Meets. First, I'll be meeting Chinese artist and dissident Ai Weiwei, and I'll talk to the novelist and political scientist Elif Shafak. Tune in to watch those who shape our world explain how the world shapes us. This is Emma Barnett Meets on Bloomberg Quicktake.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Welcome back to the Open, everyone. 24 minutes into the European trading day, and this is the picture across the board. We're still seeing gains, apart from the FTSE down 0.2%. Now, Europe's earnings season goes into full swing this week. Top investment banks are taking center stage, including UBS, Deutsche Bank, and Credit Suisse. Now, let's get straight to all of the earnings. Of course, April Roach joins us. So, April, what can we actually expect from Credit Suisse's planned update on its strategy review on Thursday?
Yes. So Credit Suisse has promised to provide an update with its third quarter results on its comprehensive strategy review. And the bank is reported to be considering the sale of its U.S. asset management operations and also its securitized products business. So investors will be keen to find out if this review will include any update on details of either of these units. Analysts also say that Credit Suisse could report a decline in fees and trading revenue in this quarter compared to the same period last year. But the big question will be whether the bank needs to raise additional funds via a capital increase, which could result in the diluting of its stock. So all in all, a hotly awaited announcement from Credit Suisse, which could see a significant reshaping of its business.
So, April, how are recession concerns and the strengthening of the U.S. dollar, for example, impacting Deutsche Bank earnings?
Yes, so Deutsche Bank also scheduled to report this week, and US dollar gains are actually expected to support fixed income trading results in euros for Deutsche Bank. The bank earns more from fixed income in comparison to its peers, with about a 25 to 30% top line exposure. And last month, the bank said that it was well on track to reach the top end of its 2022 revenue guidance, as higher interest rates more than offset the impact from a weaker economy. But bonuses will also be in focus for Deutsche Bank, as the European Central Bank continues to urge lenders to exercise restraint.
All right, April, thanks so much. April Roach there with the very latest on some of these bank earnings in Europe. Now, tomorrow, my colleague Manus Krani will be joined by the chief executive of UBS, Ralph Hammers, on the company's results. That's at 7 a.m. London time on Tuesday. Now, coming up, Rishi Sunak has taken a huge step towards becoming the UK's next Prime Minister after his former boss, Boris Johnson, pulls out. We'll bring you all of the latest next. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy, I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Welcome back, everyone. This is the Bloomberg Market Open. We're 30 minutes into European trading day, and here are your top stories. Edging towards number 10, the UK bonds surge at the open after Rishi Sunak steps closer to becoming Britain's next prime minister as Boris Johnson bows out of the race. European stocks extend gains as investors brace for a busy week of earnings and monitor updates from the UK leadership race. And finally, we look, of course, at China. Total control. Chinese markets tumble despite GDP topping estimates after President Xi Jinping secures a third term in office, filling the party's leadership with allies. So let's get straight to the markets with our Christina Aquino. Christina, how's it looking?
Well, friend, we're still retaining some of the positivity at the open here with both the Stock 600 up about 0.5% right now, and the DAX following behind up about 0.4%. The one standout, though, is the FTSE 100 losing that opening luster and down about 0.4% now. That is less of a UK politics story and more to do with a negative read across to the energy sector because of what we saw in China over the weekend. Some souring sentiment there, definitely filtering through to the energy markets. And as we know, FTSE 100 very much an energy-heavy sort of index, and thus we're seeing some of those declines at the moment. And speaking of sectors, let's take a look more closely at what is leading and what is lagging at the moment. Again, Stock 600 retaining those gains, primarily thanks to some gains in the utility sector, the media sector, food and beverage, and healthcare. So quite a broad-based move here and broad-based gains really supporting the index at the moment. At the very bottom, as I mentioned, some negative read across for both basic resources and energy names. Again, seeing those declines in oil today following the news out of China and following investors' negative reaction to some signs of Xi Jinping really consolidating power at the very top in terms of leadership. But all in all, still retaining, again, in the green at the moment for the Stock 600. Let's see if we keep that up for the rest of the day as the conversation moves on to whatever is happening in the UK leadership race and also what is in store for the future of ECB policy and Fed policy. Fran?
Christine, thanks so much. Christina Aquino there, looking at the markets. Now, Rishi Sunak has taken a huge step towards becoming the UK next Prime Minister after his former boss, Boris Johnson, pulled out of the contest. So for more on all of this and the future, of course, of the Conservative Party, we're joined by John Curtis, Professor of Politics at Strathclyde University. Professor, thank you for joining us. First of all, is it a given that Rishi Sunak is the next Prime Minister, or could anything happen in the next 5 hours?
I don't think we can take it as a given, not least because we have very little evidence on how Conservative members might vote if indeed they were to be presented with a choice between Rishi Sunak and Penny Mordaunt. I mean, the polling evidence, such as it is, certainly suggests that she would be starting off with much less in the way of clear, committed support amongst the membership than Mr. Sunak. YouGov, when they polled just before Liz Truss resigned, had Mr. Sunak at about 23%, Ms. Mordaunt at 9%, but there were lots of other people in that poll, including not least Boris Johnson. But certainly, given that probably even if Ms. Mordaunt gets the numbers, Mr. Sunak might still, as was the fate potentially facing Boris Johnson, might well win amongst the MPs by of the order of around 2 to 1. If he manages to do that, then the signal to the members as to who the MPs prefer might well be sufficiently strong that whatever level of support Ms. Mordaunt has perhaps will not be enough to get her past the 50% mark.
So, Professor, it does go actually to the party members. Who wins?
Well, as I said, we have very little evidence as to exactly what's likely to happen. We can go back and look at the polling in July when the membership were being asked to choose between Mr. Sunak and Ms. Truss. And that, to be honest, wasn't consistent. I can find you a poll which had Mr. Sunak ahead, and I can find you a couple of polls that had Ms. Mordaunt ahead. But I think we need to realise that the circumstances have changed since July. We know from the polling that was done earlier last week that Mr. Sunak is more popular amongst the membership now than he was, certainly as judged when they were asked again to choose between him and Liz Truss. He was now clearly ahead of Liz Truss, perhaps unsurprisingly so. And as I was indicating, I think it's also the case that assuming that Mr. Sunak wins the indicative vote amongst the MPs very, very clearly, that's also going to influence the membership. Also, the fact that significant figures on the right of the party, like Steve Baker, like Suella Braverman, like Lord Frost, have now fallen in behind Rishi Sunak before Boris Johnson indicated he wasn't standing. Again, for those who are, as it were, on the Truss side, Johnsonian right of the party, there are cues for them to go to now run with Rishi Sunak.
So why have we not heard, for example, from the likes of Jacob Rees-Mogg?
Well, I think, looking forward, and there is no doubt that one of the problems that Mr. Sunak will face is not entirely dissimilar to those that Mr. Johnson would have faced if he'd become leader, which is that there will be some who will feel unreconciled to Mr. Sunak becoming Prime Minister. They will regard this as being a coup. And I think Jacob Rees-Mogg is perhaps the most clearest person in that camp. It will be interesting to see, whether Mr. Sunak offers Mr. Rees-Mogg a job, and we're being told that Mr. Sunak is going to be much more inclusive in his cabinet formation if he gets to that stage than either Boris Johnson or Liz Truss, but then equally whether or not Mr. Rees-Mogg will be willing to serve under Mr. Sunak. I know one of the many problems that will face Mr. Sunak in the future is, will he find himself with a set of MPs, not necessarily a large number, but it doesn't have to be a large number, who aren't reconciled to his leadership and who start making difficulty for him in the...
But, Professor, I don't know if you can hear me. We may have lost connection, actually, in which case we'll get back to Professor John Curtis, of course, of politics of Strathclyde University shortly. I think you're back, Professor. And so the one question that we need to try and figure out, if Rishi Sunak is Prime Minister, does he govern, does he put country above party? Does he govern as the leader of the Tory parties, or does he just try to unite the nation?
Oh, look, the honest truth is that if Mr. Sunak wishes to have any prospect at all of being able to take his party to victory in 2024, and the truth is the odds are that given the Conservative Party has presided over a fiscal crisis, it will not be able to achieve that. No previous British government that's presided over a fiscal crisis has managed to survive the next general election. But if he's going to have any chance of doing that, he is going to have to demonstrate that he can turn the economy around, get inflation down, begin to demonstrate a high level of economic growth. That, I think, to me means certainly governing in the interests of the country, trying to turn the country around. And it's only if he manages to do that that his party will have some reasonable prospects at the next election. I think there is no choice here. He has to govern for the country as a whole and not trying to pursue the narrow interests of his party insofar as that in the short term might be thought to be different.
John Curtis, thanks so much for joining us, Professor of Politics there at Strathclyde University. Now we'll continue, of course, looking at UK politics, what this all means for the next Prime Minister. To talk more about the economic picture for the UK, joining us now is Bloomberg's Stephanie Flanders, our Senior Executive Editor for Economics and Government. Stephanie, great pleasure to speak to you today. How do you think Rishi Sunak will actually go forward in terms of fiscal plans? What can he deliver that this nation so badly needs?
Well, he has the benefit, obviously, of been drawing up fiscal plans only a few months ago as Chancellor, and he has a track record and experience of most of the officials at Treasury. And I think we have a clear view that the path that's been set by Jeremy Hunt will not be drastically altered. But whatever government comes in, and this is now, if it is Rishi Sunak, our economists have been looking at what the damage that has been done over the last 6 weeks or so by the reaction to the mini budget, but also the rise in borrowing costs that's happened around the world. We think the UK economy is going to be about 1.5 percentage points smaller within about 18 months than it would have been on the basis of the forecast of just a few months ago. So it's that hole that he's going to have to fill, whether that's through tax increases or spending constraint. That's the kind of thing that certainly investors will be looking for.
Stephanie, we had the start of QT, I think, November 1st, and of course November 3rd is the Bank of England MPC decision. Does Rishi Sunak, if he becomes Prime Minister, keep the Chancellor to speed things up and make sure that Halloween fiscal plans delivered on October 31st?
Yeah, I think there's been a great desire to see those plans continue. And again, he does have the advantage. I think if someone was coming in with very little Treasury experience and experience of handling the economy, like Penny Mordaunt, there would be a much bigger question mark about whether you could conceivably have a Prime Minister could have any kind of ownership over that plan. But as soon as Monday, a week from today, I think it's much more likely now, whether we stick with that date or something very close to it. We do know it's very important for the Bank of England to see those numbers before the next meeting, and as you suggested, that doesn't leave a lot of time. We've also had suggestions from the Bank of England that they already feel reassured by the new path that's been outlined, at least in basic principles, by Jeremy Hunt. I think the other thing it's worth noting, Francine, is that we've actually got to the point where investors are probably certainly in our view, overstating how far the Bank of England's going to have to tighten into next year. So yes, we probably get a 75 basis point increase in November, but we now reckon that they will top out more in the fours, maybe around 4.25%, rather than the kind of 5 percentage point bets that I think are still many have in the market.
Stephanie, I don't know whether you think the last 2 months have actually, changed and altered the course of the UK significantly for international investors for years to come, and even politics, or whether there can be a quite swift readjustment.
I think it was something, and others have commented on this. I think that there was the reaction to the mini budget, which arguably was an overreaction. It was the policies were not sensible by orthodox economic opinion. But the degree of the reaction, I think, was partly down to the sort of breaking of the dam, if you like. We've had, since the Brexit referendum, just a series of chaotic governments, a series of lines being crossed that we previously hadn't thought the UK would cross in terms of, the clash between politics and economics. And it was sort of the sum total of that, which Liz Truss was kind of reaping that whirlwind, along with the fact that her policies seemed to be completely out of tune with the times. But, we should remember other countries are going through the same thing. Certainly the rise in borrowing costs has not been that different from other countries. And in fact, the fact that we're now looking at the Bank of England raising rates less just shows that we're expecting the UK economy to slow more than other countries. So I guess we've had the poor policy making. Investors will look at that and maybe feel reassured, but they'll also look at the fundamentals of the UK economy and worry a little about that. Also about inflation now being higher next year than we expected, because that energy cap is only going to be 6 months rather than 2 years.
Stephanie, thank you so much, as always. Our Stephanie Flanders there from Bloomberg Economics. Up next, we'll talk a lot more about China, more on President Xi's consolidation of power as the party congress closed. Analysis with Christian Keller, he's head of economics research at Barclays. That's coming up next, and this is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open, everyone. 45 minutes into the European trading day. A lot of, well, not concern, but certainly a lot of focus on what's happening in China. Here in Europe, we're looking at PMIs. We're looking at the ECB on Thursday, 75 basis point hike priced in. And then, of course, we look at UK politics with Rishi Sunak likely at this point, but things could change, be the new prime minister. Now, Chinese markets closed lower, despite GDP actually topping expectations after President Xi Jinping filled the country's most vulnerable bodies with his close allies. Now, let's get reaction from Christian Keller, head of economics research at Barclays. Christian, so good to speak to you today. Thanks so much for coming on. How do you view the turning point on China over the weekend and how markets are interpreting the way forward?
Morning, Francine. Yes, I think, some of the things that happened were expected. Obviously, Xi, confirmed his third and it's probably endless term. But there was few surprises. And I think, the removal of anyone who was associated with his predecessor, Chairman Hu, and, the fierceness with which Xi brought all his allies in. And, now the standing committee of the Politburo is really full of people who are very loyal to him and who have been implemented his policies to the full extent, including the zero COVID policy. And all this, I think, points towards something that market broadly had expected, but maybe not to that extent, that we have now a fully consolidated power. It is no longer so much about growth. It's about, security. It's about a more inward-looking growth, and it's about confrontation with the West. That's what it seems, and I think that's what market reacted to.
So, Christian, what exactly is the underlying concern for the markets? Is it the impact this would have on global growth, especially if they continue with the COVID zero policy? Or is it really something else, more underlying, maybe more sinister about the consolidation of power?
Well, probably both. I mean, in the first instance, I think what we know now is that zero COVID policy will be changed at the margins at the best. And that means it could stay in place for longer. We will probably hear more about it in coming months, but it would seem that, we now have to think about it, something that will remain. That was clear. Second, we do know there's a growing confrontation on the China side, but also, on the US side, if we look at the export controls for chip technology that was coming, was just ruled by the US Congress just recently. So I think markets are looking at both, and they see that both sides are becoming less cooperative, more confrontational. And, the outcome of the party Congress this weekend cemented this, I think, in markets' views. I would say maybe
Christian, what does that mean going forward, for example, from dollar strength? Christian, what does this mean for dollar strength?
I think overwhelmingly, the markets think now that the dollar remains strong. What we see is a U.S. economy that is better equipped to what we see currently than most other economies, in the sense that, yes, we will see rates going higher, but we still see a pretty robust U.S. economy, a strong labor market, and the tightening of financial conditions through higher rates will have an effect, but the effect on the U.S. economy, pretty closed economy, still growing quite well, will be less intense than it is on the rest of the world. So I think until one sees, the pivot by the Fed, which some in the markets are hoping that will come towards the end of the year, we are less optimistic. We think it will extend well into 23. Until one sees the terminal rate, the dollar will remain strong.
Christian, is there an underlying belief in the markets that actually the Fed no longer has a 2% target, that targets overall for central banks will stabilize around the 3% mark? And again, if you look at the underlying bets of what the Fed could do, does it assume that that consumer does not fall off a cliff, and do you think that's a possibility?
The question about the 2% target is a very interesting one. Many investors I speak to believe that, at the end of the 2%, so in the longer term, central banks will not have what it takes, if you want. They will not want to sacrifice the output and the employment that is needed once inflation has come down somewhat, and which we all expect in 23. At the same time, if we look at markets, break-even inflation, five-year forward swap, they don't really price that. But I do sense there's whether it's a concern or it's just a belief that inflation will stay over 2 for the coming years, as there's also no interest from highly indebted governments necessarily to get below 2 or 2%.
Christian, thank you so much. As always, Christian Keller, their head of economic research at Barclays. We'll have plenty more, of course, on the markets and on the economy. Also later, Rishi Sunak taking a huge step towards becoming the UK's next prime minister after his former boss, Boris Johnson, pulls out. Our coverage live from Westminster continues. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet's 737 MAX aircraft.
carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Season is here.
The earnings are starting to pour in.
The numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going across the wire.
A big beat. Stock is up more than 8%. Coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch? That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to the Open, everyone. Let's get the latest with Christina Aquino on the markets. Christine, what do you have?
Well, Francine, we're still continuing to see green as far as the equity indexes go. Spanish IBEX leading the gains here in Europe with gains of about 1.2% here. Of course, the standout laggard is again still the UK FTSE 100, down about 0.2%. So we're pairing a little bit of the losses that we saw earlier. And of course, that is a direct read across to what we're seeing in commodity markets today. Take a look at Brent crude, again, extending those losses to 1.1%, and now at the moment trading at that $92 handle here. And I want also to take a look at the sovereign bond column here on the GFM screen, particularly on that UK bond rally here, the 5-year yields extending their declines here. And 5-year sector, definitely a great kind of linchpin of both monetary policy expectations as well as expectations for inflation in the long end. That's it. Let's take a look at the cross asset board here and some of the key markets that we're watching for at the moment. Once it comes up, again, a pound cable holding up its gains is up about just slightly under 0.2% here at the 113 handle. And dollar yen, that's another big story during the Asia session today. Of course, we saw Japanese intervention to support the yen, but that yen weakness is continuing here, Francine.
Christine, thank you so much. Christina Aquino there with a good look at the markets. Now, that's it for the European Market Open. Surveillance Early Edition is up next. We'll be live from Westminster. We'll have a full roundup of what's happening on the markets. We'll also have MPs trying to figure out whether Penny Mordaunt has 100 signatures or will she get 100 signatures by 2:15 p.m. Today to get through the second round. We'll look at UK politics, Italian politics as we have a new government, and of course we look at China. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
This is Bloomberg Daybreak with links.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
Welcome to Bloomberg Crypto.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Westminster. Now, we look at the politics, and this is what's coming up on today's program. Edging towards number 10, UK bonds surge at the open after Rishi Sunak steps closer to becoming Britain's next Prime Minister as Boris Johnson bows out of the race. European stocks extend gains as investors brace for a busy week of earnings and monitor updates from the UK leadership race. And finally, we look at China. Total control. Chinese markets tumble despite GDP topping estimates after President Xi Jinping secures the third term in office, filling the party's leadership with allies. Now we're getting a bit of breaking news. Euro area October manufacturing PMI coming in lower than expected, 46.6. We had a 47.9 forecast. A reminder, anything below 50 is still a contraction. Euro area October services PMI also falling to the forecast, 48.2%. So we'll have a look at what that means. There was a brilliant, actually, blog entry from our Venram saying, look, unless these PMIs are really ugly, which frankly they haven't been because they're pretty much in line with expectations, then the ECB, he thinks, is on course to deliver a 75 basis point hike on Thursday. Now, let's focus on Westminster. Rishi Sunak has taken a step towards becoming the UK's next Prime Minister after his former boss, Boris Johnson, pulled out of the contest. Well, that leaves Penny Mordaunt as the only possible opponent in the race to succeed Liz Truss. Joining us now is Bloomberg's UK government reporter. He's Joe Mays. Joe, great to have you on the program today. Look, we're 9 o'clock UK time on the dot, and it doesn't look like Penny Mordaunt has the 100 MPs required for her support to go through to the second round. Could that change?
It might change. She only has, say, 30 public backers now, and the only way she could get to 100 is if those Boris Johnson supporters en masse went across to her. But the problem we're seeing for her is that some of them publicly are coming out for Rishi Sunak. So we're seeing kind of seepage, effectively, to the Sunak campaign, and Mordaunt can't have that. So it's not looking great for her, but, you know, who knows? It's a private process right now, so she could get over the line, but it looks unlikely right now.
So how many does Rishi Sunak have now? About 155?
More than 150, yes.
And that number's just going up?
It is going up, yes, exactly.
So if Penny Mordaunt does have 100, then it goes to the base, the Conservative membership. Is it all to play?
Yeah, so there'll be an indicative vote tonight where MPs express a preference, and you'd expect Rishi Sunak to win that vote, probably. But then, like you say, it would go to the Conservative Party membership, where Mordaunt is perhaps more popular. So there is still a chance that she becomes Prime Minister. So the key thing to watch out for is today, 2 p.m., does Mordaunt make it onto the ballots? Or indeed, this morning, does she concede to Rishi Sunak because she hasn't reached 100 nominations?
Joe, what do we know about the policies, actually, of Rishi Sunak? I know we know maybe a lot more than others because he campaigned just 2 months ago, but actually a lot happened in the last 2 months.
Yes, I think Rishi's policies are fiscal conservatism, and that would likely be mirrored with what Jeremy Hunt's been offering as Chancellor. So you could expect kind of number 10 and the Treasury to be really in lockstep on fiscal policy in a way that perhaps they weren't in the last days of Truss, where Jeremy Hunt effectively junked her economic plan. So Rishi, we know, fiscal conservatism, try and bring inflation down. Those are his kind of headline policies.
I mean, if you look at the media pundits, everyone's asking what happens to the Conservative Party now. I mean, does it really matter what happens to the Conservative Party? If you have one person in power for the next 2 years, does he need to govern for the country?
Well, I think that Rishi's first job will be to try and bring that party together, because the Conservative Party can't have what it's had in the last couple of weeks, but open division, rancor. It looks terrible to the public. So unite the party, and then, yes, like you said, he has a 2-year window in which he can try to turn the country around and be in a position where you go into that next general election with a good perspective to the country. That will be his aim, for sure.
Okay, Joe, thanks so much. Joe Mays there, looking, of course, at some of the politics here in the UK. Now let's get straight to the markets. The Prime Minister Liz Truss on her way out. The huge economic and fiscal headwinds ahead spell further pain for the pound, regardless of who wins the contest to become the UK's next leader. Well, here to unpack all of it is Jane Foley, head of FX strategy at Rabobank. Jane, as always, thanks so much for joining us. So what happens to the pound now?
Well, you know, the pound, if you like, has certainly been supported by the news that Boris will not be standing again. I mean, Boris acknowledged that it would be quite divisive for the party. And, of course, the markets have a preference for Sunak. He's well known to them as a chancellor. His concerns over the summer about Liz Truss's policies really did prove correct. So the markets understand that we really do need someone in here, who will tighten the strings fiscally. And that seems like he's going to do. And that, together with Hunt, is the best outcome, I think, for the markets. But, you know, we've got to acknowledge that UK fundamentals were pretty weak all year. They were pretty weak ahead of the September the 23rd mini budget, and they're still weak now. So there are still headwinds, certainly, for sterling, even if it appears that we might be a step closer to a better outlook from the fiscal policy.
So, Jane, what exactly is being priced in on the fiscal side right now? If it's Rishi Sunak, is there an assumption in the markets that he keeps the Chancellor, Jeremy Hunt, and that actually nothing changes, and we could even have the fiscal plan on Monday?
I think there is that assumption there. I mean, I think it's got to be said that probably the same would have to be said about Penny Mordaunt and Rishi. They'd understand the turmoil that we've seen over the last few weeks, and probably understand the turmoil attached with replacing Chancellor Hunt with another Chancellor will just add to that. So I would imagine that Chancellor Hunt will be confirmed. It's a shame that neither candidate has confirmed that already. But assuming that is confirmed, then certainly that brings some degree of calm. Now, if we were to have both names go ahead in the ballots out to the Conservative Party members throughout the country, i.e. if Mordaunt and Sunak were both on that ballot, that would certainly bring some more uncertainty back to the markets. We wouldn't know who the Prime Minister would be until the end of the week, and that would raise the chances that the membership vote for Penny Mordaunt, which it would not be the most market-friendly candidate. But if we do get Sunak today being assured as the Prime Minister, I think there's probably a little bit of more scope here for sterling to potentially rally. But then, of course, it would just face the real reality, whereas there's a lot of ground to cover.
Yeah, I was going to say nothing really changes actually for what the Bank of England needs to do. So what are the options for the central bank?
Well, I think everyone assumes that the bank will be hiking interest rates again aggressively to keep a lid on inflation. But the good thing is that, assuming that we have Sunak, assuming that we have Hunt remaining as the Chancellor, it means that the government will be working in lockstep with the Bank of England. That is not what we had, of course, under Truss. Truss was putting demand back into the economy through tax cuts at the time when the Bank of England was taking demand out through tighter monetary policy. So already we've seen rates shift a bit lower today. So yes, the Bank of England clearly will be hiking interest rates quite aggressively, but not as much as they would have had to do if we'd have had Truss's policies adding that demand back in. So yeah, interest rate hikes, yes, but not as much as they would have been otherwise. And we've already seen the market react to that this morning.
Jane, there was quite a lot of news, of course, over the weekend from the China People's Congress, and that sent shockwaves on markets. I don't know whether you look at that through a U.S. strength point of view or whether you'd rather focus on renminbi.
Well, certainly, you know, that the renminbi has seen a big setback. I mean, in terms of its outlook, if we look at the data that we had, for instance, this morning from China, we had the GDP a little bit better than expected, but certainly if you look at the retail sales, there's certain weakness there. And I think what's really, hanging around the outlook for the renminbi and certainly investor sentiment for China is the continuation of zero COVID and what that could mean for growth in the months ahead. So there's that factor combined with the political concerns related to the toughness now of Xi's, the fact that he's been put back in power again for a third time, and the fact that he really has consolidated the power behind him. So we have a very strong one-man leadership in China too, and that is certainly very worrying. But if we look at Hong Kong shares this morning, I think we get a taste of the market's concerns about not just the politics, but also the economics in China right now, and they're certainly not looking good.
Jane, thanks so much. Jane Foley, there, head of FX strategy at Rabobank, stays with us. We'll talk a lot more about China and, of course, dollar. Coming up, the future of China now lies in the hands of Xi Jinping and his all-male inner circle of proven loyalists. More on what this means for the world's second largest economy. That's coming up next, and this is Bloomberg.
digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
But look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. We're at Westminster, and of course we also look at a broader field with China and Italy. Now, Chinese markets tumbled after President Xi Jinping tightened his grip on power. Now, it comes after the Chinese leader actually filled the country's most powerful agencies with his close allies, while also securing an unprecedented third consecutive term, the close of the party congress in Beijing. Now, let's speak now to Bloomberg's Asian government and politics correspondent, Rebecca Chung-Wilkins. Rebecca, thank you so much for joining us. So what does the new lineup tell us about Xi and China's direction going forward?
Well, we've really seen Xi Jinping looking to consolidate and concentrate his power in the upper echelons of China's Communist Party, even more than we had, and many had predicted, in fact. 4 out of the 5 members of China's Supreme Leadership Group, that's the Politburo Standing Committee, are Xi Jinping's protege. The 6th man, and it is all men, is one of his close allies. And some of the exits from both the Politburo and that Standing Committee have also surprised and reinforced the idea that loyalty has been a key deciding factor when it comes to choosing who will take these top leadership positions, essentially paving the way for a group of politicians who will look to dedicate themselves to implementing Xi Jinping's policy. He has effectively ruled out any effective form of dissension or pushback. There is a question and a concern that there could be policy missteps without these types of sort of checks and balances, even within such a tightly controlled political group like the Standing Committee.
Rebecca, how are the markets reacting?
Well, we've seen quite a brutal day across Chinese asset classes. In fact, today, 8 shares and China shares that are traded in Hong Kong have fallen to their worst since 2008. The currency has also weakened onshore to its worst since the global financial crisis. Chinese corporate offshore junk bonds are at a record low. So it is quite a sort of resounding sense of pessimism here. Really, I think, off this idea that as Xi Jinping tightens his grip on power, there is less likelihood and less room that there will be a move away from some of the most punishing policies on the economy so far. So that is COVID zero, which has really dragged on economic growth, as well as the property crackdown too. And this emphasis on sort of socialism with Chinese characteristics driving the market going forward, and along with common prosperity, doubling down this idea that actually ultimately policy is increasingly going to be driven along ideological lines, it's going to be increasingly dominated by the state, and that's propelling that pessimism for many investors, particularly for international investors, now looking at what the next 5 years of China holds for them.
Yep. Thank you so much. Bloomberg's Asian government and politics correspondent, Rebecca Chun-Wilkins. Now we'll have plenty more, of course, on China. We're back with Jane Foley, head of FX strategy at Rabobank. Jane, we talked a little bit about renminbi. Overall, what does this mean for the world economy?
Well, certainly as long as we've got the zero COVID in place, I think the world economy, as we've become to expect, has really been constrained by that. But of course, the political constraints are something that the market is also getting used to, and that is the China being driven less by consensus and more by just one man, and that is something which could have long-term implications, and certainly is something which will just create this sense that's been building all year amongst investors of doubt in the outlook for the Chinese economy over the next 5 or so years.
So, Jane, where are you expecting overall for sterling to? I mean, actually, I was going to ask about dollar, but I don't know whether there's also sterling, because all of the concerns on sterling could be exacerbated by what's going on around the world.
I think you're right, and I think to some extent it's the other way around as well. You know, what we've seen in the UK, what we've seen in terms of politics could also be mirrored, perhaps to a lesser extent, in other economies. So, for instance, we've seen the Liz Truss experiment of trying to promote growth through fiscal support coming at a really bad time, because, of course, it operates against what central banks are doing. Now, you could potentially say, well, you know, what about what's happening in Germany in terms of the fiscal support that's coming there, being counter to what the ECB is doing. Now, clearly, there is nothing like the sort of scale, and as it stands right now, Europe does have a current account surplus. So the region is not as exposed by the UK, but certainly I think there are many economies around the world, many governments, which will be taking some lessons, really, about the importance of fiscal prudence in this environment.
Jane, overall, are you expecting the U.S. economy to actually hold up? So we've seen it in the bank earnings that, consumer spending has been able to stay pretty strong. Does it fall off a cliff into next year?
Yeah, I'm fairly pessimistic, to be honest. I mean, certainly for some economies, depending which ones, there's more lasting support from some of the COVID savings. But I think, if we look on ahead to next year, that will be eroded. The impact of inflation on household finances will be a lot more marked. And I think if we look at consumer confidence numbers and a whole variety of economies, we see them really having weakened quite significantly. I mean, the Eurozone, certainly the UK, even if we look at the PMIs that we've seen this morning, I think these are worrying numbers. We're talking about contraction. We're talking about the possibility that the UK may already be in recession. If we look at the PMI for Germany this morning, and perhaps we're talking about the inevitability of a German recession. So I think as we move into next year, I think we're going to fall across, some pretty tough times for an awful lot of people.
All right, Jane, thanks so much. Jane Follow there, head of FX strategy at Rabobank, joining us in some of the calls in currency markets. Now, coming up, we'll have plenty more, of course, from Westminster, also trying to get over the line. Challenger Penny Mordaunt has just a few hours to gather enough support. Otherwise, Rishi Sunak set to become the next prime minister. So we'll talk about that shortly. This is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together. Now I would have a much more experience about those who says I love you and then betray you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci is really teetering on the brink at this stage.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Earnings season is here.
The earnings are starting to pour in.
The numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going across the wire.
A big beat. Stock is up more than 8%, coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch? That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at Westminster. Now, the focus, of course, on all things politics, but also let's get straight to your Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Russia's defense ministers called counterparts in the UK, France and Turkey, warning of a drift towards uncontrolled escalation in Ukraine and the potential for Kyiv to detonate a radioactive dirty bomb. Ukraine has consistently denied any such move and says Russia often accuses others of what they do plan themselves. The US called the allegation transparently false. Now, Giorgia Meloni has been sworn in as Italy's new prime minister, becoming the country's first female leader and heading its most right-wing government since World War II. Meloni must steer the euro area's third biggest economy through an energy crisis compounded by rising interest rates and also slowing growth. She'll address both houses of parliament this week for a confirmatory confidence vote. Australia's Treasurer Jim Chambers says he saved an unexpected windfall in commodity prices rather than risk spending it and adding to inflation. Chambers will unveil his first budget on Tuesday night, where he'll balance delivering on Labour's spending promises from their May election win with a worsening economic outlook.
The slowing of the Chinese economy and their approach to zero COVID does have consequences for our economy, and you'll see that in our own budget forecasts. Not a revolution in how they go about that, but a bit of a rethink about making sure our markets are diverse. And so I work very closely with our big employers and our big exporters to make sure that they've got the mix right. China is an important economic partner. There's no use pretending otherwise.
Now, Shell is investing in Qatar's latest natural gas project with a 9% stake in the North Field South expansion. The project is part of the Gulf nation's efforts to boost capacity amid a global surge in gas demand. Russia's invasion of Ukraine has sent European nations on a frantic search for alternative sources to Russia. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, Rishi Sunak has taken a huge step towards becoming the UK's next prime minister after his former boss, Boris Johnson, pulls out. We'll bring you the latest from the UK and Westminster next. This is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Edging towards number 10, UK bonds surge at the open after Rishi Sunak steps closer to becoming Britain's next Prime Minister as Boris Johnson bows out of the race. European stocks extend gains as investors brace for a busy week of earnings and monitor updates from the leadership race here in the UK. And finally, total control. Chinese markets tumbled despite GDP topping estimates after President Xi Jinping secures a third term in office, filling the party's leadership with allies. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, actually in Westminster, covering all of the machinations and the comings and goings over the weekend. Now, Rishi Sunak has taken a huge steps forward towards becoming the UK's next Prime Minister after his former boss, Boris Johnson, pulled out of the contest. That leaves Penny Mordaunt as the only possible opponent in the race to succeed Liz Truss. So, with the very latest on politics, I'm delighted to be joined by Bloomberg's executive editor for international government, Roz Matheson, and then we'll go to Robin Niblett of Chatham House. So, Roz, is it almost a certain win for Rishi Sunak, or can Penny Mordaunt still get the 100 MPs in the next 4 hours?
Well, that's the big question, because certainly momentum is very much with Rishi Sunak. At this point, he's got a lot of endorsements coming out. Even again this morning, senior figures in the Tory party saying they're rallying behind him to become the next leader. Penny Mordaunt, of course, is yet to say what her decision is. As of last night, she said that she was still in the race. She said she was confident of getting 100 Tory lawmakers, which is what she needs to actually get on the ballot for leader. The question is how many of those who were supporting Boris Johnson will now shift behind her. Will she get enough to get over the line? At this stage, it looks unlikely. And the question is, does she drop out of the race ahead of time, or does she try and force it to a vote of Tory lawmakers later tonight?
So, Roz, is there any, I mean, you know, we're talking about secret agreements, and then this, we understand, it really came to fruition. Is there any understanding that if she gets the 100 but is very far behind Rishi, she doesn't go through, or does it definitely go to Tory membership?
Well, certainly there's a lot of backroom conversations going on again today about how they can stave off a damaging potential further escalation of this leadership ballot, which is already coming on top of turmoil that's afflicted UK politics for weeks, if not months. And there would have to be some conversation about the fact that if she only gets just to 100 lawmakers, should she really go forward at that point and insist on a ballot in Parliament later today, or should she step aside? Perhaps there might be conversations going on about an alternate role for her in a Sunak administration, for example. Can he bring in a unity government, and all those people who might have been contesting the leadership now have a role in his administration, for example? Yeah. You can imagine those chats are going on ahead of time today.
Roz, thank you so much. Roz Matheson there, our executive editor for international government. So we're staying here, of course, at Westminster. We're joined by Sir Robin Niblett. He's Distinguished Fellow at Chatham House. Robin, as always, thank you so much for joining us. I don't know what we would expect, or what you would expect, you know, a premiership with Rishi Sunak to look like.
Well, some of the language that's been used about him, that he's used about himself, competence, patience,
One thing we know is you'd be in line with where the markets would like the UK to do. You'd have a Chancellor rowing with the Bank of England as opposed to against the Bank of England. I think he would hope even to get a little bit of a bounce economically. The debt might drop. Therefore, some of the extra delta that's been increased in the markets and the cost of British debt might drop and help a little bit with the numbers. I think he's going to try and build, obviously, a unified cabinet.
Will that work? I mean, not cabinet, but actually the party, because he needs the party to get things through Parliament.
100%. Look, I think it's a half and half. I mean, the majority realistically now is more like 70. That means only 35 have to vote against you for you not to be able to get legislation through. 70 could abstain and you would be able to get legislation through. My sense is there's a good 25 to 30 Rishi haters. I think of the 60 or so who were meant to be in favour of Boris Johnson, half of them at least would move over and come in behind Rishi Sunak. And you've had already this morning Nadhim Zahawi, Priti Patel, some of the people on that side saying, look, let's unite behind. But there are some, Nadine Dorry's kind of wing of the party, that I think would never accept it. Is that enough to block him? I don't think so. I think, you know, the party is going to lose dreadfully in 2024 if they don't row in behind him. They'll probably lose in any case, even if they row behind him. But they've got to be looking ahead, some of them even to 2029.
Is there a chance, Robin, of having a general election before? Or actually, is he, if he becomes Prime Minister, is he in charge for 2 years?
There's a chance. Look, my gut is Labour obviously will fight this hard for the right for a general election. Would they want to take over the country right now from a practical standpoint? Is it better for them to let him take the tough decisions for the next 2 years? Probably yes. Rishi himself thinks he can do a John Major in 1992, you know, after the overthrow of Maggie Thatcher. Despite all the odds, he beat Neil Kinnock in that amazing election. They still lost after that, of course, and badly for a long time to Tony Blair. So I think Rishi Sunak thinks that there's still some doubts about Labour. They don't have the Scottish, SNP are against them now. So Labour is not, as strong. There's still a Corbyn memory. I think he thinks he's got something to fight for, and the party do as well.
I'm hearing so much about party politics. I mean, we're going through a huge inflation crisis. We're going through, of course, a huge cost of living crisis. Like, what does the country need? What does he, become Prime Minister to this country, and so tries to do better so that each and everyone has a chance?
Yeah, but the problem is doing better right now is very difficult. It's how not to do too badly. Yeah, you've got 30 billion roughly pounds a year to fill, probably after all of the Jeremy Hunt ditching of Liz Truss's programme and Kwasi Kwarteng's programme. So whatever happens, departments are going to take really tough hits. The fact that Ben Wallace was with the Boris Johnson camp on defence, maybe they say that 3% target is later. He hasn't made the move over yet, but that's going to save you very little on the margins. It's really about cost savings and where. I may agree with you. It's going to be incredibly difficult, but they only have one choice, which is to try to get a budget through.
Do you think Rishi Sunak would, stick with the current Chancellor?
My gut would be yes. Nadhim Zahawi was on the wrong side and only jumped at the last minute. In a way, Jeremy Hunt has already laid out the Rishi Sunak programme. What you do not want is another tough person who's going to take him on in the Chancellor in the number 11 Downing Street position, which is the traditional problem. So if you're going to run 2 years, you need an absolute loyalist doing the job that you proposed, which is what Jeremy Hunt does with Rishi Sunak.
I mean, what happens, actually, if we were to have an election tomorrow? It's also very likely that the Tories are not the opposition, that we could see the SNP being the opposition. Where does this leave the state of UK politics?
This is another reason why they've got to hang him for 2 years from the Conservative standpoint, because if an election would be held today, it could be seismic. Yes, you could even have, as you said, Conservatives literally blown out of the water. With our first past the post system in the UK, it's winner takes all. Look, realistically, I think the push for Scottish independence rises, but it's still delayed. That has to be approved by Westminster. Again, I'm not sure that, that's wanted by Nicola Sturgeon right now. Everyone's trying to get as much as they can out of the chaos for a campaign, I think, in 2 years' time, not for a campaign in the next 6 months.
What kind of relationship would Rishi Sunak have with the EU? What kind of relationship would he have with the US?
Look, there's been some articles written, I would certainly be an advocate of it, that if you're going to try to get through this incredibly choppy time, you can't do it fighting the EU at the same time. Brexit adds a drag effect to the British economy. It knocks percentage point, or half a percentage point certainly, off British growth on an annual basis. So I think, ideally, he would bury the hatchet, not make big concessions. The problem is, Suella Braverman's come in, he's got Stephen Baker, a lot of the people he brought in to do the big tent are the ones who are saying, you won't back off on being tough on the European Convention on Human Rights, which is not the EU thing. He was always pro-Brexit, but he's pro-Brexit, but somebody looking at those economic opportunities of deregulation, which you could still go through with. It's really about the Northern Ireland Protocol. Will he back off on that? Will he push the bill through? I would hope they don't, but this is one of my worry points, is that to hold the tent together, he's got to keep fighting the EU for 2 more years, and that'd be bad for the British economy.
Robin, thank you so much for joining us. Sir Robin Niblett, their distinguished fellow at Chatham House, joining us also on the foreign policy aspect to the new possible premier. Let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Philips is to cut 4,000 jobs while it struggles with a costly recall of its sleep apnea treatment devices. Termination-related costs are expected to be about 300 million euros. The new CEO of the Dutch multinational, Roy Jacobs, says the company hasn't lived up to expectations. Now, delayed economic data from China showed a mixed recovery in the third quarter, with unemployment rising and retail sales weakening in September, despite a pickup of growth. GDP rose 3.9% in the quarter from a year ago, rebounding from almost stagnant growth in the previous period when Shanghai was still in a lockdown. China's home prices, meanwhile, sunk for a 13-month in September, with home sales and property investment also continuing to fall. Bloomberg has learned that Credit Suisse Chief Compliance Officer Rafael Lopez Lorenzo is set to leave in the coming weeks after little more than a year in the post. Sources say his departure is not related to the strategic review the Swiss bank is planning to announce this week. Lopez Lorenzo was part of a new crop of executives appointed in the wake of multiple scandals at the Swiss bank. Now, Shell is investing in Qatar's latest natural gas project with a 9% stake in the North Field South expansion. The project is part of the Gulf nation's efforts to boost capacity amid a global surge in gas demand. Russia's invasion of Ukraine has sent European nations on a frantic search for alternative sources to Russia. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now let's go back, of course, to Westminster, where we've been all day. Joining us is Labour MP Emily Thornberry. Thank you so much for joining us. I know Labour believes it's time for a general election. Many in the public think it's time for a general election. But what will it take for you to get one?
Well, 70% of the public think there should be a general election, in fact. I think they think that because there's all this going on, this kind of Conservative Party psychodrama is going on. It really affects us. I mean, the last lot crashed the economy, you know, and they said they were going to help with bills, but all they've done is put up mortgages and are really frightening people. And they now say, oh, we need to have austerity Mark II. I mean, they weren't saying that a few months ago. Now they're saying it. And, you know, the public don't get a say in any of this. I mean, we're supposed to be a democracy. It's really very frustrating and very difficult.
I mean, political rules are political rules in terms of elections.
They're not rules. They're not rules. I mean, the fundamental rule is what's good. Right? No, it's not a fixed-term parliament. No, because we got rid of the Fixed-Term Parliament Act. Well, they did. You know, they introduced it, then they got rid of it. Okay. So now it's up to MPs. It's up to the Prime Minister when we get an election. Right. But you know, if his or her MPs go and say we're not going to support you anymore, then you can have a general election.
You need about 40 of those MPs to basically not support him. Do you think that will happen before 2 years?
Well, a lot of them, right, were saying we are going to support Boris Johnson because he's the only one who has a democratic mandate. Do you remember? So they were saying because he led the party in 2019 when we got the general election, then he's the only one with a mandate, so we have to support him. No. Well, of course, now Boris Johnson's not standing. I would just ask those MPs, well, given he's no longer going to be your guy, who are you going to support? You can't support anybody with a democratic mandate. Do the right thing. You know, look after the country first, and then the party, and then yourself, and go for a general election.
So it looks like Rishi Sunak is the next Prime Minister. Do you think we'll be in a better path in terms of growth than when it was under Liz Truss?
It's difficult to imagine being worse off than being under Liz Truss, but, I mean, we're not as well off as we would be if the country were able to decide, and we're able to decide on a stable alternative. They're crying out for change. They don't want this anymore. They want a Labour government, and they're not being allowed to have it. And that's just wrong. And I find it difficult on a day like today to just kind of accept that there's going to be somebody who's essentially going to be crowned, you know, without even a vote of their MPs, let alone of their members, let alone of the public. He hasn't even done a media round of coming around explaining what it is that he's going to do. So, you know, we may assume he'll be better than Liz Truss, but we don't know what his policies are. I mean, he had a lot in the summer, but a lot's changed since then. So does he still stand by that or not? Nobody knows.
Is it better for Labour to just wait until the winter months come? So all of the, you know, the inflation, it's going to be very tough for whoever's in power to actually put policies that put this country on a better path. Is it better to wait so that this gets done by someone else and then you stay in power for longer?
So we don't know how bad it is because the Office of Budget Responsibility hasn't been allowed to publish its reports. So we're going to see it a week on Monday. Then we'll see how bad it is. We don't even know yet. I think in the end, we need to be in power because we need to save the government. We need to save the country from this government. I mean, it's as stark as that. The longer they stay in, the more of a mess I think they're going to make of things, and the more difficult it'll be for us to sort it out afterwards.
Do you think Labour is now the party for business more than the Tory party, given what happened in the last 2 months?
I think that the Labour Party is the party of growth and stable economy, and so therefore that's what business wants. We've got this, you know, Tesco's, which is obviously one of the big businesses here. Chair of Tesco says only Labour is on the pitch when it comes to having a plan for the growth of our economy. You know, we are getting many businesses turning to us and realising that actually, you know, although historically there may be prejudice in favour of the Conservative Party, look at the reality. The reality is they can't be trusted with the economy, and Labour can.
Emily, thank you so much for joining us. Emily Thornberry there, Labour MP. Now, we'll have plenty more, of course, throughout the day here from Westminster. Many people comparing the uncertainty in UK and Italian politics these days. So we'll go live to Rome, where Giorgia Meloni has also been sworn in as Italy's new prime minister. She's the country's first female leader heading its most right-wing government since the Second World War. That's coming up shortly. And of course, investors closely watching how she navigates the energy crisis, inflation, and Italy's mammoth debt. Actually, let's get straight to our bureau chief in Rome, Alessandro Speciale, who joins us. So, Alessandro, what will define Meloni's government right now?
Well, the first thing is that she has wanted to emphasize a line of continuity with the previous government, with Mario Draghi's government, on foreign policy, especially when it comes to Ukraine, despite the misgivings, let's put them this way, of some of her coalition parties like Silvio Berlusconi. You have probably read about the audios where he was actually basically blaming Zelensky for the invasion that Russia conducted against Ukraine. And then also on the European Union, what she will try to do instead is to put a stronger emphasis on defending the national interest at the EU level and also internally, boosting champions, boosting hopefully competitivity and doing the reforms and keeping EU money flowing. It's very complicated with an energy crisis and with the recession coming, and in the next few days, actually tomorrow, we'll hear her speaking in Parliament and see how she wants to tackle all these challenges.
So, Alessandro, exactly what are you expecting her plans to be?
Well, on the first hand, I think she has to finish the budget law that has to be done by the end of the year. There is a little money to be spent, about 8-10 billion euros that are sort of leftovers by the stronger growth that Italy achieved under Draghi. And there is a lot of relief measures for companies, for families, to help them stand the increase in energy prices. This is the first thing that she will have to do. And secondly, she has to prepare for the international commitment. Number one is the renewal of Italy's commitment to support Ukraine, to send arms to Ukraine, which is due at the beginning of next year.
All right, Alessandro, thank you so much. Bloomberg's Rome Bureau Chief, Alessandro Speciale. Now, coming up, we'll have plenty more, of course, from Italy and the UK. Coming up, reading the tea leaves, we'll discuss the mood amongst voters in the UK amid months of turmoil with Associate Director of YouGov, Patrick English. That's coming up next, and this is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
But look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get back to Westminster. Rishi Sunak and Penny Mordaunt are contending for leadership of their party and country. Betting markets are one barometer of their chances. Current Sky Bet odds have Sunak as clear favorite. Now, the other place we might look to for some signals are the polls. Mordaunt tweeted this morning that some polls show her to be the likely candidate or the candidate likely to deliver a fresh start. So joining us to discuss the polls, what they tell us and what maybe they don't tell us, is Patrick English. He's Associate Director at YouGov. Patrick, great to have you on the program today. So what did the polls tell us?
Good morning. Yes, well, the polls tell us that Penny Mordaunt certainly might have some room to grow into. She's very much unknown compared to Rishi Sunak. Rishi Sunak, of course, a very well-known politician. He had the furlough scheme. He was Chancellor. Penny Mordaunt less so. So she has room to grow into, but also she has room perhaps to go down. When we look at the favourability ratings...
So this would be in favourability if we were to go to a general election tomorrow?
Exactly, yes. We're looking at favourability here. So the percentage of people that have a favourable opinion minus the percentage that have an unfavourable opinion of the politician in general. Now, Rishi Sunak is just ahead of Penny Mordaunt at the moment. However, as we said, Penny Mordaunt has a lot of room there. A lot of people don't really know who she is or what she stands for, so they're quite uncertain. So she does have room to grow, but at the minute, Rishi Sunak is kind of ahead on that metric.
I mean, it's interesting because we don't really know the policies. I know they both campaign, of course, in the summer, but we don't really know what they'll be like, either of them going forward. So is this just general, this favorability is what in terms of likability? Is it policies in the past? And in terms of, like, how, you know, what are people thinking out when they give you your polls?
Yeah, so I think it's very much that. It's a general sense of how favourable, how much they like the politician versus how much they dislike. And that can be a number of judgments. It can be policies in the past, it can be platforms they put forward, it could be policies that they've been involved in or have endorsed, or people around them. Sort of, you might say if Boris Johnson goes over to Penny Mordaunt, that might actually cost her in terms of the court of public opinion, because Boris Johnson is not a very popular politician. So there's a lot of things that feed into that. And right now, as you say, Rishi Sunak is probably just ahead, but there's room to grow for Mordaunt.
I mean, do you have a poll for the Tory party, and is it different, you know, for the Tory party as a whole compared to some of these leaders?
Yeah, well, certainly when we asked the party membership earlier last week who they would prefer to come in as leader, it was Boris Johnson who came in top of that poll with a third of the party backing him. Rishi Sunak was not too far behind on 25%. Yeah. And earlier as well in the same poll, we asked if you had the chance to vote again for Truss or Sunak. We found that Sunak was way ahead of Truss. So certainly there was a lot of buyer's remorse around the Conservative Party, and they might be looking at Rishi Sunak now and saying, well, you've probably been proven right around the economic arguments, so maybe it's time that we give you a go.
What's the Labour Party doing?
So the Labour Party right now isn't doing too much, and it really doesn't have to, because right now, if you go to the public and ask them what they want a general election and they want a Labour government. But as far as we know, to the best of our knowledge, they're going to get neither. So the Labour Party probably has a challenge now of convincing the public, reassuring the public that they are safe, they have a reassuring plan to deal with the cost of living crisis.
Patrick, what I find amazing, and I saw in certain polls, for example, they had the SNP as the real opposition. If there was election tomorrow, like how volatile polls like that, given the chaos that we saw over the last 47 days.
They're extremely volatile, and one of the reasons for that is that most of these headline vote intention figures are driven by significant portions of 2019 Conservative Party voters telling us that they either don't know who they would vote for in an election tomorrow, or they simply would not vote. So that's a big chunk of the volatility there. If they all went back to the Conservatives, or even a significant chunk of them went back, then the Conservatives would be doing much, much better than those headline figures would be suggesting. And of course, it's midterm. It's an unpopular government with the most historically unpopular leader we've ever recorded. So we're going to see some big gaps, I think, and we should expect them to close as the Parliament draws will close as well.
I mean, have you had to change some of your polling metrics, compared to last time? I know that there's been a lot of pressure on a lot of the polling since Brexit. Do you do things differently now?
We are constantly always looking at ways to improve our polls. So we're testing against benchmarks. Yeah. We're looking to see if we can correctly predict election results. We're bringing in new data when we have it from census or sort of a population survey. So we're always looking for new methods, always testing things out. So yes, we're very confident that we've been improving over the last few years.
How many people want a general election now? More than 70%?
It's around 70%. So depending on how you ask the question, what you do with the don't knows or uncertains, somewhere between 60 to 70% of the public say they want a general election now. And that includes significant proportions of Conservative voters from the last election as well. So it's not just opposition supporters who want an election. It's a lot of people who voted for this government last time around.
How volatile do you expect these polls to be as we get into one of the worst cost of living crises in recent memory?
I think there's room for it to go either way, right? As you say, the cost of living crisis is not going to get better in the short term. It's going to get worse. People are going to find that they have even less money to pay the bills coming through their doors. So that could lead to an even bigger Labour lead. The Conservatives could go further behind, particularly if whoever comes into the power in the Conservative Party, be it Sunak or Morden, doesn't reassure the public that they have a plan for the cost of living crisis. However, let's say for argument's sake that they do. Rishi Sunak, for instance, might come in with a good plan that seems as popular and seems to do something with the markets and with people's bills. Perhaps then we see that close up. So there's a lot of volatility, and it could go either way at this moment in time, I think.
Patrick, do you have a poll showing whether the Chancellor is popular at the moment?
The Chancellor is okay in terms of favourability. It's not too bad. What we tend to find is that politicians get quite unpopular the longer they're in office, and when they drift out, the public kind of get to grips with them a little bit more and say, okay, maybe he weren't so bad. So he's gone up, but he's still, listen, no one in British politics right now is super popular. Even Keir Starmer bounces around the 0 mark in terms of net favourability. So we can't really point to anybody and say you are a sort of public opinion superstar, and the Chancellor is among that group, unfortunately.
I love that. You're not a public superstar. Patrick, thanks so much, Patrick English there, our superstar here in public opinion when it comes to polls, Associate Director of YouGov. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Katie Lyons in New York, Anna Edwards here at Westminster. And this is Bloomberg.
These floating flowers are made of 92,000 solar panels. Laid on the surface of a reservoir, they can generate 41 megawatts, which is enough to power 20,000 homes. It's one of the biggest floating solar plants in the world. Floating solar arrays have been gaining traction in Asia, including countries like Singapore and Thailand. Floating projects typically benefit from an easier connection to the power grid. They can also restrict algae blooms while keeping the solar panels cool. This one in particular has helped the local economy. When the power plan was first proposed, residents were given the chance to invest. Some locals were also offered jobs during construction. In fact, it was the community that requested the panels to be shaped as flowers to look more appealing. South Korea still relies heavily on imported fossil fuels, but will need to change that to reach its goal of becoming carbon neutral by 2050. Solar plants like this one may help the country reach its net zero goals.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
We've seen the power of the markets over the last few weeks. Clearly, what we mustn't do now is anything which signals to the markets more chaos, instability, and uncertainty.
We have to keep the rate at a tightening level, in order to fully reestablish price stability.
We can be amused, those of us who don't live there, by some of the things that are happening in Britain. But if we think of it is an experience that's entirely outside of any kinds of concerns that other countries could have, that would be a real mistake.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 5 a.m. in New York, 10 a.m. in London, 5 p.m. in Hong Kong. These are our top stories today. Rishi Sunak edges closer to becoming the UK's next prime minister. Sunak won a key endorsement, and former Prime Minister Boris Johnson pulled out of the race. Chinese stocks haven't fallen this much since the 2008 financial crisis. Investors are reacting negatively to Xi Jinping's decision to fill his leadership ranks with loyalists. And the Japanese yen is falling once again after earlier gains were reportedly supported by what seems like a fleeting intervention. That's no bueno. Welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller with Katie Greifeld here in New York. Anna Edwards with us out of Westminster. And Anna, it looks like we may have a new prime minister in Rishi Sunak.
It looks like we might do today at some point. That certainly is where the momentum is. He, in the last few hours, has been gaining momentum, gaining supporters. Remember, you need 100 MPs from the Conservative Party to get onto the list, and it seems he's got well above that. But the key question now is whether Penny Mordaunt, who is also vying for the position, whether she will get to 100. Her team, confident that they have, but not much evidence of that right now. Markets responding then to the potential for a Rishi Sunak prime ministership, buying gilts, buying the pound, expectation of fiscal discipline. We'll see what happens, what develops in the hours ahead. Katie, what do you see in the Asia market session?
Well, it was a much gloomier picture overnight in Asia. As Matt said, you had Chinese President Xi Jinping stack his leadership ranks with loyalists. A lot of fears about what that means for COVID-0 policies, what that means in terms of pressure on state-owned companies, historic losses as a result. You saw the CSI 300 down, but most of that selling came in Chinese tech, the Hang Seng Index taking the brunt of that selling. What that meant for FX markets, too, a lot of pain in terms of the onshore yuan hitting its weakest level against the dollar since 2008. And we should check in on the yen as well. You can see we're edging up back towards 150. The yen had surged against the dollar on reports Friday about BOJ intervention. Like Matt said, it looks like those gains are short-lived, though, and all of this coming before the BOJ meets later this week.
All right, now let's take a look at what's going on in terms of U.S. markets. You saw it a little bit there with Katie. Excellently handled, by the way, until we switch back over to the Asia board. U.S. futures down 0.4%, but what a rally we had last week. I mean, we closed the Friday session out up more than 2%. We closed the week out up more than 4.5%. It's the strongest week that we've had I think since July. So real rally last week. It would make sense to let a little bit out, take some profit off the table today. The 10-year yield coming down right now, and we're seeing this with yields around the globe. I'm not sure how much of it has to do with the huge moves that we've seen in the UK, but you do have investors buying U.S. debt as well, pretty much all across the curve except for the 2-year right now. The 10-year yielding 4.1981. The Bloomberg Dollar Index coming back up a little bit after going down to 1337. I will say that on Friday, we charged up to an all-time record high on the Bloomberg Dollar Index. We were at 1357. We've been down to 1337. Now we're coming back up a little bit as the dollar gains against most other currencies, with the exception of the pound. Very interesting exception there. And then NYMEX crude coming down a little more than 2%, $83.24. So even after the big cut that OPEC had, I guess we're continuing to see more barrels come out of the SPR, but that's not making a huge difference. It's got to be concern about a global recession and demand falling out that's keeping oil down at these levels. Anna, what do you see in Europe?
Yeah, well, following on from the strength that we saw on Wall Street at the end of last week, Matt, we have been trying to make gains here in Europe, despite some disappointing economic data coming out of the Eurozone. We've got PMIs that disappointed across the Eurozone, below 50 on services, on manufacturing, and on the composite number. Despite that, managing to make some gains, not as strong as the gains were earlier on, responding a little bit to the nervousness coming out of the Chinese market post the party congress taking place there. But that's what we have on the European equity markets then, a positive picture, apart from notably the UK, where perhaps the FX market effect is weighing on large cap stocks. This is what we have on FX markets. The pound over that 113 mark at 113.20, rallying a little. It rallied in the latter part of yesterday's session as well, as we heard from Boris Johnson that he's not going to stand, and as the market increasingly positions itself around the expectation of a Rishi Sunak win. We're also seeing buying of gilts. You can see that at the 2-year horizon and those yields coming off. We put Prosus in the chart as well. This tech business listed over in the Netherlands, down by 12.9%. This is a Tencent effect. It has a stake in Tencent over in China, and so there's read across from the Chinese equity session into what's going on in Prosus and therefore in the Netherlands. And Philips down by 2.8%. This company, medical devices business, of course, these days, cutting 4,000 jobs under a new CEO. They've been recalling products and around sleep apnea. So there's some specifics around Philips, but you have to wonder how much this micro relates to the macro and broader concerns around the Eurozone economy. Well, let's go from the Eurozone to concerns around the UK economy and what a new Prime Minister can do about that. Rishi Sunak took a huge step toward becoming the UK's next Prime Minister after Chancellor Jeremy Hunt endorsed him and former Premier Boris Johnson pulled out of the contest. Joe Mays, our UK government reporter, joins us now for more. Joe, very good morning to you. And it's not just, yes, he's got the endorsement now of the Chancellor, which matters, but also some prominent Boris Johnson supporters have now moved from supporting Johnson yesterday to supporting Rishi Sunak this morning.
Yes, former Home Secretary Priti Patel just come out to support Rishi Sunak. James Cleverly, the Foreign Secretary. These are big Boris Johnson supporters now backing Sunak. So you're right, he has the momentum going into today. The key question is whether the challenger, Penny Mordaunt, can she get above 100 nominations to contest that ballot this afternoon? Now, Penny Mordaunt's campaign just put out a statement saying she's in it to win it. She's getting the numbers. So we'll see. There's no concession yet. So an exciting few hours ahead to see whether she gets there.
All the media organisations trying to work out how much support she has. It's maybe in the 20s, low 30s, but the team's still confident that she can get 100.
Yes, perhaps behind the scenes she has more private backers, people from the Johnson campaign coming across to her. We will find out in the hours ahead whether that's true.
Matt, jump in.
Why does she not just pull out? I've wondered, especially over the last few hours, as Rishi seems to be gaining real momentum here. Wouldn't it be better for the party to have to be united behind one leader?
I think she's not pulling out because she does genuinely think she could get to 100 backers. And she also knows that should it go to the party membership, which is what would happen if she gets onto that final ballot and they would vote with the result on Friday, she thinks she could win that. So that's why there's still a path to Prime Minister for her, which is why she's staying in the race. But clearly, if she can't get to 100 today, she will concede and she will back Rishi Sunak, and that will get to that party unity that you talk about, Matt.
Bloomberg's Joe Mays, thank you so much. Let's move from UK politics over to what's happening in Asian equity markets. Asian equity markets and really cross-asset. You had China's yuan weaken, and stocks tumbled in Hong Kong to the lowest level since the depths of the 2008 global financial crisis after China's leadership overhaul. This follows last week's Congress, and Xi's closest allies will oversee all of China's top institutions, giving him even more control in his third term than in his first 10 years. We have Bloomberg's John Liu, who covers Greater China, joining us now from Beijing. And John, it seems like a pretty cross-asset, really condemnation of what this could mean. What do you think is worrying markets the most at this point?
So I think what's worrying markets is that Xi Jinping has obviously got the levers of power squarely in his hands, and that will give him more room to pursue the policies he sees best fit. So I think you talked about COVID zero a little bit earlier, but other things such as common prosperity, the sort of populist push to reduce the wealth gap, but which includes potentially more taxes on things like property, on inheritance, on capital gains. Those are not things that the markets want to hear. And obviously also in terms of diplomacy, a more assertive stance that we've seen under Xi, that looks like it will stick, and that potentially raises the possibility of more tensions with the United States.
Yeah, John, it does seem as if tech stocks have taken this pretty badly. Had there been an expectation that perhaps the crackdown on tech, which we've seen over months and months, really, years even in China, whether that there had been an expectation that could have been over and now the market's fearful that it's back?
I think what the markets are worried about is, as Xi Jinping gathers power in his own hands, that he will push further on this common prosperity idea, and then that will in turn lead to cracking down on entrepreneurship, on risk-taking, on venture capital, and that will in turn lead to a slower growth, not only for the internet companies that are listed already, but for those that might become listed in the future.
Bloomberg's John Liu, thank you so much for covering it. I know it's been a busy couple of hours for you. Now let's take a look at some of the stocks moving in pre-market trading in the U.S. We have to start with Tesla, of course, cutting the price by 5% of its cars in China, even as it ramps up production at its Shanghai factory. You can see Tesla off about 3% in the pre-market, and that comes down to a Friday deadline for Tesla CEO to close his $44 billion purchase of Twitter or go to court. If we take a look at what Twitter is doing, it was actually edging a little bit higher to the tune of about 1.3%. Of course, this follows a 5% fall on Friday. A lot of that was thanks, of course, to Snap, reporting the slowest quarterly sales growth ever. That's as advertising spending really dries up. You can see Snap's down another 3% or so in pre-market trading after a 28% plunge on Friday, Anna.
Yeah, some big moves there, Katie. Coming up on the programme, we'll get back to the UK politics. Anna Menon joins us, UK and a changing Europe director. He'll give us his expertise on UK politics, the chances of Rishi Sunak, and what could still happen in this race as we wait for the 2 o'clock deadline UK time. That's in around 4 hours' time. We'll also talk markets with Hans Olsen, Chief Investment Officer and at Fiduciary Trust Company. What's his expectation around the Fed and therefore for stocks? What does he make of Chinese politics, Japanese intervention in the currency markets? Probably. We'll talk about all of that. Plus, UBS projects a Swiss exterior of discretion and calm, but rivalries are playing out at the very top. Read more of today's big take story on Bloomberg.com or on the Bloomberg terminal. This is Bloomberg.
What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in Westminster in London with Matt Miller and Katie Greifeld in New York. Let's focus in on the UK political story. UK bonds have been surging after Boris Johnson pulled out of the race to become the UK Prime Minister, leaving former Chancellor Rishi Sunak as the clear front-runner. Joining us now for more is Anna Menon, Director of UK in a Changing Europe. And Anna, we find ourselves in a strange situation where it seems possible to say, yes, Rishi Sunak is definitely the front-runner here. There have been more public declarations of support for him, but we could still see Penny Mordaunt get onto the ballot. She could perhaps still get 100. At least her team seems to think so. What do you think of the prospects of each?
Well, I mean, the fact of the matter is it's impossible to know, isn't it? The nature of this ballot, with it being MPs who are the electorate, means that people are very secretive and sometimes, heaven forbid, a little bit duplicitous. So we won't know the numbers until they're announced. As you said, the Mordaunt team seem very, very convinced that they can get to 100. And of course, if she does, then that raises the possibility, at least, that this race continues till Friday and goes to Conservative Party members. We don't know if she'll get to that stage, and if she does get to that stage, whether she will concede on the basis that she doesn't have the support among MPs that Rishi Sunak does, or whether she'll go for broke and push the thing till the end on Friday.
And if we do get Rishi Sunak, markets, of course, are very focused on whether we get fiscal restraint. It's something that he acknowledged was necessary over the summer. Didn't land him the top job then, but seems as if it could be a slightly more palatable message now. We know that much about what he would bring. Would he be able to command the confidence of the party, of the House? Because that does seem something that Penny Mordaunt supporters keep saying, that she would be more of a unifying figure. What do you read into that?
Well, I mean, you've hit the nail on the head. I mean, there are two big issues about Rishi Sunak and the economy. The first is, remarkably, we just don't know what his plans are. And that's because we're not involved in selecting the next Prime Minister, which means that above and beyond his sort of statement that he's going to fix the UK economy, we don't know what he means. Is he going to raise taxes? Is he going to cut public spending? How is he going to fix the UK economy? We know that he plans to be fiscally prudent in a way that Liz Truss clearly absolutely was not. But above and beyond that, we have no details. And that brings us to the political issue, which is he will be in charge of a Conservative Party that is fundamentally divided over key issues of economic policy. There are some in his party representing those Labour seats that Boris Johnson won, who are in favour of greater investment, who don't want to see ordinary people lumbered by more taxes, who would probably think taxes on the better off is a good idea. And then there are traditional Conservatives who believe just the opposite. Whether or not Rishi Sunak has the political skills to pull that very disparate coalition together, we're going to have to wait and see, but it's going to be very, very hard, I think.
I want to quickly ask about the kind of dirty little details that those of us living outside the UK don't see every day. Sunak has a problem in that he's incredibly wealthy, is that correct? And that a lot of Britons see him as helping to bring down Boris Johnson.
On the first, on his wealth, he certainly ran into trouble before because his wife had non-domicile status for tax purposes. And I think when that came out, it reflected quite badly on him with public opinion. So yeah, but he's dealt with that now. He's, I think, given up his green card. His wife's given up her non-dom status. So I would be surprised if that were much of an issue for him going forward. This Conservative cabinet is full of people who are pretty wealthy, so I don't think he stands out in that regard. And I can now no longer remember your second question. So
Boris Johnson, apparently, you know, a lot of people, especially in the Conservative Party, give him the credit or blame him for bringing down Boris Johnson as one of the first to give out his resignation.
That is a problem. I mean, there is an anyone but Sunak camp amongst MPs who feel furious with him for, as they see it, being the person who brought down Boris Johnson. I'm not sure he is the person who single-handedly brought down Boris Johnson, but actually the narrative is that he did. And that's problematic because you already have the sight of Conservative MPs saying, if it's Sunak, he'll have no legitimacy and we have to have a general election. Now, at a minimum, that simply provides attack lines for the opposition Labour Party. At a maximum, it speaks of the fact that these people are not going to be supportive and he's going to struggle to carry his measures through Parliament because he only needs 30 or 40 Tory MPs to turn and he will not have that majority.
All right, and thanks so much for joining us. Pleasure having you with us and appreciate your insight. Anna Menon there, Director of UK and Changing Europe. I want to quickly bring you some breaking news on the Chinese yuan. The offshore yuan has weakened past 7.3 for the first 7.3 to the dollar for the first time ever. Now, this comes amid, as Katie Greifeld was saying earlier, a real cross-asset move to the downside, really showing a disapproval from the market's perspective of the new cabinet that she has put together, made up entirely of, some would say yes men, but certainly they're all men. No women for the first time in 25 years in the ruling board of the party, and basically allies of Xi, and the market is concerned about this because of a number of policy issues connected to that. So the offshore yuan falling past 7.3 per dollar for the first time ever. We're going to continue to cover this Chinese story as well as the race to become the next UK Prime Minister. This is Bloomberg.
U.S. inflation numbers are released.
The score is inflation won, Fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out. Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority.
Build on a foundation.
Katie, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Katie Greifeld here in New York and Anna Edwards at Westminster. Now, keeping you up to date with the news from around the world, here's the first word. The U.S., UK, and France are rejecting Russia's allegations that Ukraine is preparing to use a so-called dirty bomb. A statement from the three countries' foreign ministers called Moscow's claims a pretext for escalation. A dirty bomb combines conventional explosives with uranium. Goldman Sachs CEO David Solomon reportedly clashed with his executives over the firm's strategy for its consumer banking business. According to the Financial Times, the dispute came before Goldman announced a retreat for the division known as Marcus. Solomon argued that Marcus should offer current accounts in addition to savings products and loans. And Tesla has cut the price of its cars in China by about 5%. That partly reverses price hikes imposed earlier this year. Tesla is facing more competition from Chinese electric vehicle makers such as BYD, which sold a record 200,000 vehicles last month. So, it's very interesting to see Elon Musk continuing, Tesla continuing on in China, as are all other businesses, right? And banks continue to court Chinese businesses. We're also seeing bankers continue to court the crown prince in the Middle East as they prepare to go to Riyadh. Katie, do you see that? We're going to see the biggest CEOs go to a convention there.
Yeah, pretty huge. I mean, I want to focus on Tesla, though, because it was interesting reading this story when you think about what we got last week in terms of their earnings, their quarterly revenue missing estimates. It's a busy time for Tesla. It's just a busy time in general for Elon Musk, too, as we think about what is going to happen with Twitter, when we can stop talking about this back and forth, Anna.
I feel like we'll be talking about it for a very long time. Even when he's got hold of it, there'll be a lot to talk about. That's about all I can predict with any certainty. Coming up on the program then, Katie, we'll talk to Hans Olsen, Chief Investments Officer at Fiduciary Trust Company. What does he make of investments in Europe right now? Eurozone PMIs, UK PMIs, all coming in really disappointing this morning. The Eurozone ones all below 50. The investment strategy that he employs as CIO, we'll get into that. Where does he see the Fed heading? Will they move from 75 down to 50? This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball, so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are on Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Rishi Sunak edges closer to becoming the UK's next Prime Minister. Sunak won a key endorsement and former Prime Minister Boris Johnson pulled out of the race. Chinese stocks haven't fallen this much since the financial crisis in 2008. Investors are reacting to Xi Jinping's decision to fill his leadership ranks with loyalists. And the Japanese yen is falling again after earlier gains were reportedly supported by a fleeting intervention. I'm Anna Edwards at Westminster in London with Matt Miller and Katie Greifeld in New York. And Matt, the focus here, of course, on the politics. The UK stands out a little different from other European markets today because we're buying the pound, buying gilts, perhaps selling some big name stocks as a result because of expectations of Rishi Sunak at number 10, although that's not certain for another few hours, perhaps.
Yeah, but it does look like you're overcoming to some extent that moron risk premium that we were talking about last week. Let's take a look at what's going on here in the U.S. Speaking of morons, we have the S&P 500 down a little bit more than 0.5%, but what a rally we had on Friday. Absolutely ripping face on the S&P, up 2.7%, and for the week we were up, I think, 4.6, 4.7%. So it was the strongest week that we've had in terms of moves to the upside for the S&P since July. Just a real rally on a lot of volume. I think 3.6 billion shares on the New York Stock Exchange. So that's that. Obviously, you could take a little bit of profit. A little bit of selling is not unusual after such a rally. The U.S. 10-year yield coming down, and yields are coming down across the curve with the exception of the 2-year yield that's climbing only slightly. I think the spread right now between 2s and 10s is about 28, 29 basis points. Right now, the 10-year yield at 4.1960. And the U.S. dollar index back up a little bit after coming down to 1337. This is the Bloomberg Dollar Index. We had climbed up to 1357 on Friday, which I thought was an all-time high, an intraday all-time high. But a very good trader wrote into me and said, wait a second, in September we were up to 1361. Okay, so, but we were close, right? Real dollar strength, and that has come off a little bit where we're climbing back up today against most major currencies except for the pound. NYMEX crude is down about 2%, down at $1.67 a barrel to 83.38. So this could be a tailwind for equities if we get a little bit of turnaround by the time we open up. Katie, what do you see in the pre-market?
Well, if we drill down and look at some of the individual names with the S&P 500 futures lower, I have a lot of red on the screen behind me. We kick off, of course, with Tesla. Busy sort of period for Tesla. Of course, overnight cutting prices of cars in China by 5%. That has the shares lower by about 3.7%. Pre-market. Busy time for Elon Musk, too. Again, we're counting down to that Friday deadline for him to really close that $44 billion deal to buy Twitter or go to court. If you look at what Twitter is doing, it's sort of bucking the trend of other social media stocks. It's higher by about 1.2%. Of course, that follows a 5% fall on Friday, which, of course, was a thanks to Snap. We saw that big pullback in ad spending. That sent Snap shares lower by about 28% on Friday. Losses building now. It'll be interesting to see what the other social media companies report as we get really into the thick of earnings season. I wanted to check in on Schlumberger, off by almost 3%. This company posted its highest profit in 7 years on Friday. But of course, Anna, oil is lower. You have that trickling through into shares of Schlumberger as well.
Yeah, absolutely, Katie. Let's have a look at what's going on. A big picture then across European equity markets. And European stocks managing in aggregate to eke out some gains, up by 0.5%. I mentioned that the London market looked a little weaker, partly to do with a surging pound, though perhaps. I say surging. It was surging. Now it's pretty flat, isn't it? 113.08. We are seeing more appetite for gilts, though, today. We're seeing gilt buying, certainly at the short end of the curve. And those, you can see the yields coming down there. We're at 3.5%. So as the market increasingly moves to price in Rishi Sunak as the next Prime Minister here in the UK, that is not certain. It won't be certain unless Penny Mordaunt fails to get 100 MPs to support her. But as the market increasingly has that expectation, we're unwinding some of that risk premium attached to the pound and attached to gilts over recent weeks. Prosus is in focus. This is a Chinese, has Chinese exposure, this particular business. Tencent is the holding that it has. And so we talked about this one earlier. That stock under considerable pressure. That's the read across from the Chinese session, if you like, into what's going on in Europe. And Philips down by 3.9% today. 4,000 jobs to go. A new CEO really making himself felt, Matt. And I suppose with this business, which has been taking charges relating to recalls for some of its sleep apnea products, you wonder how much of this micro story really reflects something more worrying and has a sort of bigger symbolism about the macro.
Yeah, I mean, I think a lot of people are having difficulty sleeping lately, so that makes sense. Let's bring in Hans Olsen, Chief Investment Officer at Fiduciary Trust Company. Hans, let me just first get your take on the general markets, as we've seen what a lot of people are thinking looks like a bottom. We had a great rally in U.S. stocks last week, up 4.7% for the week, the strongest we've had since July. Is this just a bear market rally?
I think we are. Well, first of all, good morning, Matt. I think we are in this process of trying to find a bottom in this market, and I think this process is incredibly messy. It's going to take some time. We're not certainly off to the races again. We're going to see a lot of data out this week that will have an impact on the narrative around interest rates, et cetera. But I am confident that we're trying to find a bottom in these markets now, and this is part of the next phase.
You know, a lot of people are talking about the U.S. recession as possibly short and shallow, and it seems to me this may be the new transitory, right? What's your view on how bad it gets for a recession that Bloomberg Economics says now has a 100% chance of happening?
Yeah, that's going to be the big story, right? So, I was looking at the numbers, the expectations for growth both this year and next, and oddly enough, overall consensus numbers for 2023, I think it's something like 1.6% growth for the economy. So if we get a recession, I think the numbers would suggest that it would have to be a mild one. I keep wondering if this is the recession that fails to happen. And this is what we'll see this week, right? We'll get an inkling of this with GDP numbers coming through, which at this point is somewhere between 2 and 3% expected for the quarter. So, yeah, if we do get one, I'd have to say it would be more on the mild side based on what we're seeing right now.
Good morning to you, Hans. If I could ask you about your expectations for Europe. We've had Eurozone PMI data that looked disappointing, certainly suggesting contraction, and the UK story continues to deteriorate. On the other hand, the one area of hope perhaps is gas prices. That benchmark across Europe continues to come down close to 100 euros a megawatt hour right now. What do you see for the European economy heading into the winter, which many assume will be difficult?
Yeah, well, I think that's the question, is what the weather is going to be in Europe. And so forecasting will be as difficult and mercurial as forecasting the weather. I do think that there's a lot that we just simply don't know right now in Europe. Aside from the politics, we'll have a new administration, a new government in the UK, perhaps today or certainly before the week's out. Number one, we've got a new government in Italy. We have problems. Obviously the war in Ukraine is a massive impact on what's going on in the European markets from the perspective of energy. And then we have winter coming. And so, trying to understand or forecast anything in Europe other than it's going to be a pretty tough winter one way or another, I think that's the only safe thing that we can say at this point. Valuations in those markets are getting better, but what are the catalysts to make the economics better? So remains the open question.
Well, to your point that there's a lot of uncertainty in Europe, we're heading to what could be a very messy winter. And if you look stateside, a potential recession on the way, where do you find safety? When do bonds, for example, become a haven asset again?
Yeah, well, the yields are getting up there, right? And it seems hopefully if inflation comes down enough and yields go up enough, they meet somewhere in the middle and you start to get a real yield that is reestablished. And at that point, bonds get incredibly interesting, where you actually don't dissipate purchasing power of your capital if you own them the way that we have over the last several years. I think we're in the process of having that happen. If we look at yields on high yield right now, even yields on investment grade debt, they're getting up to levels now where they're starting to get quite interesting. We're watching for any breaks. So if we see any sort of credit events that causes a rethink of risk pricing in these markets through their spread relative to treasuries, that's when we'll start to really start to get active in these markets. These are certainly on deck for us for the cash that we've raised earlier in the year. And so these markets, I think, will probably be the ones we go to first before we come back to equity markets.
Hans, thank you very much for joining us. Hans Olsen of Fiduciary Trust Company. Thank you for getting up early to have this conversation with us here at Bloomberg TV. Coming up on the program, we take a look at crypto's massive C-suite exodus. How much of a challenge is that for crypto? This is Bloomberg.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech and sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Katie Greifeld here in New York. Anna Edwards with us out of Westminster. She's on Abingdon Green following the race for UK Prime Minister. Now, I want to talk about something completely different, and that is crypto. It's been almost a year since Bitcoin hit a record of nearly $69,000. Since then, the cryptocurrency has lost some 70% of its value, but even more oddly than that, it hasn't moved at all in weeks. Where does it go from here? This week, the MLive Pulse survey gauged investor sentiment on crypto.
I don't think Bitcoin is the answer to what crypto promises. I think there'll be something that's just like Bitcoin, that is a mechanism of exchange.
For Bitcoin, it's about the macro, but for the rest of crypto, right, the Ethereum ecosystem and all the other, layer 1 and layer 2 blockchains being built and what's built on top of them, that's an inevitable march to starting to change how we actually operate.
I think now that we are in this market, you'll really see the builders come to the fore. And over the next couple of years, we expect a lot of innovation to happen across multiple chains. And we continue to be very, very excited about it.
Our investors recognize and the market recognize that decentralized protocols have unique advantages that not only can benefit crypto markets, but also traditional markets more broadly.
Joining us now is Bloomberg cross-asset reporter Vildana Heinrich. Vildana, thanks so much for coming in early this morning to talk to us about Bitcoin, which it's been since June since Bitcoin has broken out of this range. What's going on?
Or that it's been mired in this range, really,
Yes.
where you have Bitcoin sort of hovering around 20,000, maybe 21,000 on a good day, around 19,000 on a bad day, but it's really just been stuck. And one of the things that a lot of people have been pointing out recently is that the volatility has also dropped, where as we know, we like to make comparisons between crypto and the stock market, where a lot of people are saying it's less volatile than stocks even.
Well, less volatile than any other asset that you cover, right? I mean, bonds have been all over the shop as well. Why is Bitcoin so stable and reliable at these levels?
Well, it's a very good question. I think there isn't a very good definitive answer, except that there's not very many catalysts to help it sort of break out. So just going back to the MLive survey, you have a lot of people expecting it to potentially break out into year end, but possibly to around $25,000, which still is just an immense drop from that $69,000 level that you had just mentioned. And that, I think, has to do a little bit with some of the optimism that we're also seeing in the stock market, where potentially stocks could also have a year-end rally, and we could potentially see crypto also having this like Santa Claus rally.
Well, we need to get through October first.
Yes,
It's been a bit of a bust so far, but okay, so Bitcoin itself.
No one knows what October is.
It just means the line goes
meme.
up. Come on, man. Okay, so we've got stability in the actual price of Bitcoin, but when you look at what's happening in the C-suite, it feels very unstable. We've seen some big headline departures from some of the biggest names in cryptocurrencies in general. Walk us through some of the biggest headlines there, and also how much more upheaval is there left to come?
Well, it seems unstable for watchers like us, for people who are outside of the crypto space. But if you talk to people within crypto, they might say this is actually a very good development. It's a natural ebb and flow, I think, is what one of the investors we spoke to said to us about some of this huge wave of departures, which is, I think, notable for two reasons. One is that we're seeing departures from companies that are very high profile within the crypto space. So within Celsius or FTX US, we had Brett Harrison leaving recently, a huge number of people leaving from crypto lender Genesis. And then the second reason really is just the sheer amount of these, reshuffles, or, sometimes you have the person actually staying within the company, like Michael Saylor, but giving up some sort of title. And so it just makes big waves and makes for big headlines.
And to your point, I've definitely seen it sort of spun that this is a sign that the crypto industry is maturing. And I think that leads in nicely to what we saw out of the MLive Pulse survey, because it seems like most respondents would say that more legal action, more SEC enforcement actions would actually be good for the crypto industry, as unintuitive as that might seem.
Yeah, one person, the way they said it to me, the way they described it to me is that crypto moving out of the Wild West, which is a comparison that a lot of people like to make for the space, and just more, becoming more regulated is actually a good thing for the space because it might make more retail investors and more institutional investors more interested. Yes, the one very interesting thing out of the MLive survey is that we asked respondents to tell us with one word how they would describe the space, and the #1 answer was Ponzi, followed by future. So it really shows the dichotomy between the two, Ponzi versus future, where you have, the true believers and sort of the crypto haters still battling against each other.
Yeah, I was going to ask you about that, Vildana. When you asked them, to describe the sector in one word, they seem divided then between those who are really convinced and those still remaining to be convinced. And let's remember, this is a self-selecting audience, I suppose, but they are Bloomberg terminal users, readers of the Markets Live blog, so well-versed in finance, and maybe amongst that community, still quite a skeptical group out there.
Oh, for sure. I think you're always going to have a huge group of skeptics against the space. You just have, again, to go back to that word dichotomy, where you have the really true believers believing that the space is the future, that the blockchain is the future, that there's all these innovations happening within the space that we're going to continue using, in the years ahead, versus those who find it more speculative, where we've seen this huge sell-off in crypto prices, and they say, well, what did you expect with the stock market crashing and the Federal Reserve raising interest rates and liquidity being drained out of the system? It only makes sense to them that we would see, the speculation and froth coming out of the system.
All right, Vildana, thanks very much. Vildana Hajric there talking to us about crypto. Some see it as a Ponzi scheme. Some see it as the future. It could be both, right, in this postmodern age. Tune in to Bloomberg Crypto every Tuesday at 1 p.m. New York time, 6 p.m. in London. Our weekly show covers the people, transaction, and technology shaping the world of decentralized finance. And we often have Vildana on the program. Tomorrow we're going to speak with Ripple CEO Brad Garlinghouse. This is Bloomberg.
make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg. Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. I'm Katie Greifeld with Matt Miller in New York and Anna Edwards at Westminster. Now look at what's ahead this week. Tech earnings kick off on Tuesday with Microsoft and Alphabet reporting. European bank earnings also kick off on Tuesday, and that's ahead of the ECB rate decision on Thursday. We'll also get U.S. GDP data on Thursday as well. And the judge in Elon Musk's deal with Twitter has set Friday as the deadline for the deal to get done. Let's turn our attention now to the yen, though. Our markets reporter Valerie Teitel joins us now for the big question. Does the FX intervention mean that the BOJ is more or less likely to break on yield curve control this week?
Yes, Katie, that is the big question I think markets are grappling with. We've seen huge, unprecedented FX intervention from the Bank of Japan. Now, it's just incredible to wrap your mind around it. They could have spent up to $50 billion in the last month doing so. We know, for instance, on September 22nd, they spent $20 billion. They admitted that. And the intervention on Friday, I couldn't keep my eyes off the screen. It was incredible. We had $74 billion of volume go through that afternoon. And there's speculation, the FT is reporting, that the intervention could have been up to $30 billion. Now, the pace of this is astounding, and it begs questions. Is this going to actually strengthen the dollar long term? We have a big central bank who essentially is selling treasuries to fund this intervention. Now, on my next chart, I've got the 3-month FRA spread, which is essentially a measure of funding stress. We know that this has climbed higher increasingly in the last few months, higher than the Russia sanctions levels and reaching COVID levels. Now you have to think, this pace that the Bank of Japan is setting out, they're selling their treasuries. They're basically sucking liquidity, sucking dollar liquidity out of the system. And this could have ramifications not only from the treasury market, but for the dollar.
Yeah, definitely you could see that causing or exacerbating the dollar shortage that we already see. My question is, what happens when they break on yield curve control, Valerie? Stephen Major was on Surveillance Friday saying maybe now won't be so bad.
I mean, to get your mind wrapped around what it is, the Japan 10-year bond didn't trade last week for 4 straight days, Matt. And we look at the UK's example. We know that they had low rates, low volatility, leverage then built up in the economy. Japan is on another level, right? The low vol, the low rate environment has extended for so long. When they break, the flood of fixed income volatility, the flood of term premium to global bond assets, it's just going to be extraordinary, and it'll need to be handled very delicately because we know that the system at the moment is already quite delicate.
All right, Valerie, thanks so much for joining us. Bloomberg's Valerie Teitel giving us the down low on the Japanese yen yield curve control, the intervention that we saw and the potential size of it. Widespread ramifications, Anna, really could come from what we've seen there.
Yeah, absolutely. And so there are some voices suggesting, could Friday be the day where we see a move away from yield curve control? I know the team on the right, the Markets Live blog, a bit divided on this. Some say yes, others say no, it's not the right time, it won't happen just yet. That's one big story of this week, of course, Matt and Katie. Also UK politics. We're looking for updates then over the next few hours. We could know today if we have a new UK Prime Minister. It could go to the party membership, but we might know today sometime around 2:30 UK time. That's in a few hours from now. This is Bloomberg.
anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future?
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in a new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think the fixed income market is a little bit ahead of the equity market, particularly the U.S. equity market.
It's more likely that the equity market is actually calling this right than the bond market.
I would not be surprised how fragile financial markets are, that the Fed has to pause to get them back under control.
What the market is doing is pricing in an over 5% Fed funds rate. You're going to feel it on the equity side.
I think you'll get a hard landing, and the probability of the market pricing a return to the zero bound cannot be ignored.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
I heard you promoting shampoo in my name. Which means I'm probably not going to speak to you for the rest of this morning.
No, it's just there's a backstory to that, John. And
Okay.
we got to get out front.
He's in trouble.
Do you like my bow tie today on radio? Somebody on radio already. I wore this for Pharaoh.
I hate everything you're wearing
This is
today.
cats.
Okay?
It's cats.
You're getting no love from me at all.
I'm Tweety today.
Let me do my introduction. Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance. Equity futures just about positive on the S&P. TK, what a turnaround Friday. Let's start there to kick off the trading week.
Yeah, turnaround Friday. Mike Wilson may be leading there as the arch bear, and he says his client's pushing against it. Very optimistic into the end of the week, and he resets today over the weekend as well. John, what I would focus on is distraction, Sunak, distraction, China. We're going to end in a moment. Guess what? The markets are speaking volumes.
I agree, Tom. I think the UK's punched well above its weight when it comes to market news flow over the last couple of weeks.
Yeah.
Let's get back to focusing on the big things. China, front and center. Xi doubling down, tightening its grip on power. And Tom, I have to say, some real market reaction in response to that. The Chinese currency's weaker. The equity market really struggled overnight.
The funds flow out, and the renminbi maybe is the arch. You see, 7.26, 7 yuan was a big deal. Out to 7.26 is an even bigger deal. But given what we observed in terms of that heartbreaking, I editorialize, I'm sorry, that video we saw, do the markets tell their political establishment what to do like the markets told Liz Truss what to do?
I love how it was covered over the weekend, Tom. Hu Jintao, abruptly taken out, unscripted, disrupting the choreography. I was sitting there watching this play out, Lisa, and I just thought, Bramo, that was the choreography. That was it. They were the dance moves. Everyone knew about them except for the man himself.
And he was the former leader who really saw a very prosperous time where China expanded dramatically. This was somebody who had a more democratic type of rule, escorted out, fighting it, and then kind of going with it. What that sets up going forward, to answer Tom's question, I don't know that the market vigilantes are going to be heard much in the Politburo. I'm not sure that that's the case, at least not right now. And the feeling right now is that this is not necessarily an economy-first kind of Chinese regime.
Steve Major with us is saying he loves Hong Kong, particularly as it comes out of quarantine, with us on Friday. But you wonder what an established entrenched HSBC does or a Western bank does of what we saw this week.
Tom, you raised the right question. Will the market discipline shape President Xi in the same way it did Liz Truss? And to Lisa's point, I think most people assume no, and that's why you become even more concerned about what's taking place in China.
GDP doesn't get it done. They have a 5+ handle, I should say, within the models, within the rhetoric that they speak, and GDP coming in under 4%.
The good news is they released the data. Lisa, I guess that's the good news out of China.
The bad news is that people question, and it's kind of a scratching their heads about certain aspects that don't seem completely coherent with respect to said data. At what point, though, is this administration losing credibility in markets to a dramatic sense? The fact that they mentioned stability and security in particular, more than they mentioned the economy and business, was very concerning to a lot of people who thought that set the tone for the rest of the meeting.
Let's get you to the Monday morning price action. Good morning to you all. Good to be back in the seat. Equity futures unchanged on the S&P. I have not forgotten, Tom, the shampoo jokes. I will not forget the shampoo jokes. And I know that you're away later this week, so payback time.
I have a lot of
Big
time off. I took very little time. And
how much time are you going to take?
They gave me a week this year, so,
okay.
You know.
You're spreading that out through to Christmas. Good for you. Futures unchanged on the S&P. Yields come in 4 basis points on a 10-year, 417. TK, the 10-year yield higher for 12 consecutive weeks. 12 consecutive weeks. What a run.
And I'm going to go to the real yield here at 1.63%. John, we exploded up to a stunning 1.81, 1.82. Gave it back, but nevertheless, we set above that 160 level to begin the week.
We'll spend a lot of time this morning talking about the Japanese yen, what's happening with the Chinese currency as well. Quick look at the euro dollar 98.33. We're negative about 1/3 of 1%. Bramo, the data, the PMIs, not great out of Europe. That's the bad news. The good news, a milder winter so far, perhaps, in Europe, and softening gas prices. That's where the bright spot is in Europe right now.
All right, so all that really raises the question, what does that do for the ECB? And I want to just get a quick run through the week ahead because it is going to be a momentous week. With central bank rate decisions, we have the Canadian rate decision, the Bank of Canada rate decision on Wednesday, the ECB rate decision on Thursday. What do they do with that, John? Right now, what you're talking about is, yes, we're seeing weaker PMIs, both in the manufacturing and services side. They do have better stockpiles of energy. 2-year yield is surging into levels that people thought were unheard of about a year ago. At what point do they say we can back off versus continue to have to hike, particularly with the euro dollar and in trying to bolster the euro? This week in economic data in the United States, remember, this is probably the last slew of data in the next 2 weeks before the elections. We get home price data tomorrow, new home sales Wednesday, the first read on U.S. Q3 GDP on Thursday, and on Friday, the employment cost index, personal income and spending, as well as the University of Michigan sentiment read. How much does the employment cost index really matter heading into this election season at a time where good news is bad news, at least in the market's view? If you start to see employment costs rise yet again, what does that do to a Federal Reserve who meets the following week? And this week, the tech earnings, a slew of them. Microsoft and Google on Tuesday, Meta, Facebook on Wednesday, and Apple and Amazon on Thursday. John, this may be the most important data point of this week, or just these particular companies, how much momentum they have, what they don't have, what that says about the economy, perhaps more so than the banks, setting the tone at a time where the earnings haven't been great.
Hey, Lisa, thank you. TK, big week ahead.
Yeah, Joe Feldman, Dana Telsey, he publishes today, John. He brings down his view on Amazon due to a weaker consumer, Prime Day, and all that, but he doesn't change his high price target. He doesn't change really the view out to 2023. Maybe we'll see a lot of that.
And Mike Wilson of Morgan Stanley last week, Tom, called that tactical rally, that tactical bullish call, short-term view in the equity market up. And he's basically saying that can continue until we see capitulation from companies on EPS guidance for next year.
Yeah, Julian Emanuel, you know, he's into the Derby now, publishing every day the earnings view, and he starts out the week and he's searching for babies in the bathwater. I mean, that's Emanuel's language. Oh yeah, of course, he works for Ed Hyman. You're going to find someone with Evercore, ISI. They're out there. Everything's in the bath right now.
Thanks for that, Tom.
Thank you.
It's a good start to this morning. Karen joined us now to
and I used Irish Spring, Lisa.
The Chief Asia Economics correspondent joins us right now. And let's start here. The currency's weak. The equity markets performed poorly overnight. Tell us how much the world changed in China over the weekend.
Well, we got confirmation of just how in control President Xi Jinping is, Jonathan. You could argue, was there ever any doubt about it? But we've had the devil in the details now. We've had key personalities, the party bosses from Shanghai, Guangdong, Beijing, all former colleagues and supporters of his put into key positions. So the government is now set up in place for the next 5 years. But you have to say the welcome that they got this morning from both the economic data and of course the markets underscored the task that they have ahead of them on the economic data front. It was pretty bad across the board: retail sales, house prices, unemployment going up, trade coming off, and of course the markets also tanking as well. So not good mood music for any new government.
And kudos to the AP with a wonderful layout of these 7 people of the Politburo. And to Curran, what do the Western banks do? How do they respond to what we observed Sunday?
Well, President Xi Jinping gave a message actually that China remains open for business. Perhaps it was more upbeat, more of a message for global business than some might have expected. But you'd have to say the ongoing theme of fragmentation, China's focus on building its own technology and innovative industries that was sort of permeating throughout the Congress speaks to this idea of polarization, and in which case you have to ask eventually when will that catch up on the financial services sector. If you talk about decoupling and deglobalization, the banking sector has kind of been okay in recent years. They've been expanding and growing in China. They haven't yet been on the front line of some of the pointy end of things like the tech sector or those who manufacture goods facing tariffs and all the rest of it. But I think that sentiment towards China isn't in a great space right now. Foreign companies continue to complain they can't make money. So you have to wonder if at some point the banks also start to dim their view on China as a place to do business and if they do look elsewhere.
And was there any sign that they were willing, that this administration, that Xi Jinping would be willing to move away from COVID-0 policies anytime soon?
So there wasn't. The story on China's economy has not changed. It remains, when will they pivot on COVID-0? When might they pivot on real estate? We didn't get any hints or clues from that. So you know the whole story about how it cements Xi's control. There are some contrarian views out there, however. Some people are saying, wait a minute, they have appointed very experienced technocrats, and the fact that it is now a very unified grouping might mean decision-making becomes faster and quicker, and by extension it might lead to some sort of progress on some of these issues like on COVID-0. That might turn out to be a hopeful view, but it certainly is out there. Bank of America is one of those talking about it. I think a lot of focus will be on the Works Conference in December. That's very important for planning the economy. And then, of course, going into the NPC in March when all the officials gather to officially get their seal in office, so to speak. You can't imagine major pivots ahead of them, but watch out for the language over coming months to whether they are girding or planning the Chinese public for a big change.
And once again, awesome coverage through today. Thank you, sir. And Karen there out of Hong Kong. Lisa, you asked the right question. I think most people asked it of themselves over the weekend. Does this make it more or less likely that this leader continues with COVID-0? I think most people conclude that it's more likely that this leader concludes that he's going to lead with COVID-0. The other question I would ask as well, does it make it more or less likely that this leader maintains a more confrontational stance beyond its own borders? And I imagine that a lot of people conclude with the same answer.
Pretty much that was the universal message. This was somebody who is de-emphasizing the economy, de-emphasizing markets, emphasizing security, emphasizing the power of a nation that really is abandoning some of its previous mandates. So yes, to your point, that's really underscoring the fear that you're seeing in markets.
Looking at that currency pair, Tom, this market hears it loud and clear. Dollar CNH, a weaker currency.
Yeah, no question. It's 7.26. I haven't done the math yet, but it's a huge, huge move and really harkens back to 2015. Can we note that there's an election in the United States of America, and it's the only thing the polarized parties agree on is China.
Couldn't agree more, Tom.
It's amazing.
Isn't it incredible?
It's the one thing they agree on.
And the events over the weekend will continue to unite them on that point, I imagine. Need to talk about dollar yen too, Tom. Dollar yen.
That worked out.
See a chart of a central bank just burning through billions and billions and billions of dollars.
Nuanced.
It's the chart of dollar yen, Tom.
Yeah.
right now.
Dollar
yen 149. There was a man earlier this year that called for 150, and it hit 150. And I laughed at the time he made that call, Tom.
And he reminded you of that.
We're going to catch up with him. And he actually, you know what, he messaged me last week, and we were about 149, and he was looking for some credit, and I said, well, we're not there yet. and we're there now, I guess. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Investors are having their say on Chinese President Xi Jinping's move to stack his leadership ranks with loyalists. The yuan weakened and Chinese stocks fell in Hong Kong to the lowest level since 2008, the financial crisis then. Now investors are skeptical that Xi and his allies will seek a rejuvenation of private enterprise. In the UK, Rishi Sunak has taken a big step toward becoming the next prime minister. Former Prime Minister Boris Johnson has pulled out of the race, and Sunak won the endorsement of the Chancellor of the Exchequer, Jeremy Hunt. That leaves Sunak facing House of Commons leader Penny Mordaunt in what is now a two-person race among Conservative Party lawmakers. The U.S., U.K., and France are rejecting Russia's allegations that Ukraine is preparing to use a so-called dirty bomb. A statement from the three countries' foreign ministers called Moscow's claim a pretext for escalation. A dirty bomb combines conventional explosives with uranium. A new poll says that Americans favor Republicans over Democrats when it comes to the economy. That maintains the Republican advantage on the issue heading into next month's congressional elections. According to the survey from ABC News and Ipsos, 38% of those polled favor the Republicans on the economy, with 24% trusting the Democrats. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg. season is here.
The earnings are starting to pour
The
in.
numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going across the wire.
Big beat. Stock is up more than 8%.
Coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch?
That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
If the Conservative Party coalesces around Rishi Sunak and we get back to kind of more stable, fiscally credible policy coming through, then we're just going to settle back to, yes, the economic news is going to be bad. This much austerity means a fairly significant recession. No, that's not good for sterling because we've got a lot of rate hikes priced in, but the volatility ought to just slowly leach out.
Great to hear from Kit Jukes earlier this morning, Société Générale's chief FX strategist. Live from New York City this morning. Good morning. Here's the price action on the S&P. Equity futures just about positive, up more than 1/10% off the back of a big week of gains on the S&P 500. Yields lower, heading south, -4 basis points on a 10-year, 417.29. Euro just a little bit weaker, down 1/3%. Euro dollar 98.33. And I think this got the attention of all of us. Schlumberger, name change, guys. TK, SLB. SLB, the new name, effective immediately in a pivot to embrace clean tech. Now, Tom, I wonder, does this help your stock these days? Does this help?
It's so sad. I don't even know where to begin. First of all, Schlumberger, when you're new in the game, as I was when I could shave once a week, it was a name you tried to pronounce and you failed. It's a romantic name. It's a name steep in all sorts of history, going back to 1926, I believe it. It is. John, I go back to Jerry Tsai in Primerica. He took a venerable name, American Can. That was stodgy, and he named it Primerica. And you're like, really?
Is it better than the Aberdeen rebrand?
Oh, no, that's trophy taking.
You're still working through the Aberdeen rebrand.
I'm surprised Schlumberger didn't take out the vowels.
Ramo,
there it is.
SLB.
I mean, how much is this really a guide for what's to come? I mean, Altria, the former Philip Morris, right? I mean,
Yes.
This whole idea of vilified industries trying to rebrand, how much can they actually move away from their core business at a time, especially where that core business is needed now? Even Elon Musk saying that.
Well, odd time when we've had such a massive year for fossil fuels.
But that's exactly right.
They're making that transition.
Well, how much is this to try to get sort of nod from fund managers for pensions that have to justify investing in areas that can actually deliver returns? Because right now that's what's delivering returns.
Well,
Just say
the returns this year have been in.
I know, that's what I'm saying.
Okay, we'll save this one for another day. Futures right here, positive 1/4%. TK, big moves in this FX market.
Lots going on in the markets and in FX. You can take a general picture or you can drill down. We're going to do that right now on what matters to global Wall Street, which is the follies of Japan, the non-theory of the many Japans. Thanos Van Vakidis joins us now, global head of FX strategy, Bank of America Securities. Thanos, I want to go into some of the research I've seen on the quality of the piggy bank that Japanese institutions have. The basic idea is the amount of true reserves they have, liquid, fungible, able to move on a notice to intervene, is actually fairly strong. What is the level that those institutions are almost out of ammo to intervene to drive the yen stronger?
I mean, there are a number of considerations, definitely in terms of the actual intervention by the Ministry of Finance, there is more room. However, so far it has not been very effective. Both times they intervened, it had an immediate impact, but then gradually we're moving back to square one. We're almost halfway there, actually, already from the intervention last week. There are a number of offsetting forces as well. Usually risk-off, we had repatriation in the past, but at this point, the main institutions in Japan are still investing abroad to benefit from carry. And also there is an issue of communication, because when the Ministry of Finance intervenes, but the tone of the Bank of Japan remains extremely dovish, without any references, any concerns to the level of yen, this is not a consistent message to markets.
There seems to be a race to the bottom on the Pacific Rim, whether it's yuan 7.26, yen 150. Let's forget about the nation-to-nation math. If it is a race to the bottom, weaker currencies, what happens if, for example, ADXY breaks through to new Pacific Rim weakness?
There is evidence actually that particularly Asian central banks have been intervening, but this obviously has not been enough to stop the dollar rally. You can argue things might be worse otherwise, but these interventions are just leaning against the wind. And the truth is that the fundamental forces remain in support of the US dollar. This has to do with the fact that US inflation has yet to peak, but also in Asia, the fact that China is not reopening, and headlines on this have been mixed, but it doesn't seem something that will be immediate. This is also affecting negatively the local currencies.
Well, that's where I was going to go, Thanos. This idea that we saw over the weekend in China didn't give people much confidence they'd be moving away from zero COVID, or this idea that they'd be reopening in a way that's a throwback to where they were, say, 5 years ago. How much does that make you bearish on some of the Pacific Rim currencies, on the entire region, let alone offshore yuan, which weakens to levels never seen before?
I mean, there are the impact is through two channels. First, the way the Chinese authorities are intervening in the market because they're targeting a basket as the dollar is appreciating, has direct and indirect implications and tends to be negative for the other currencies. But also because the outlook in China is weak in this environment, countries that are exposed to China through trade channels, which obviously includes the economies in Asia, but also in Europe, are more affected by CNY weakness. We have estimated actually that through these direct and indirect channels, about half of the dollar strength this year has to do with developments in China, which is, quite sizable impact.
Thanos, wonderful to hear from you, as always. Thanos Vambakidis there of Bank of America Securities. Do you want the good news, guys? Fed quiet period. Bramo, no Fed speak.
I know.
No Fed speak until next week.
I know.
Chairman Powell.
I almost thought that should be on my week ahead, was the lack of Fed speak, because I figured that would be the lead story. Exactly.
No,
I mean, this is actually a big deal considering what we've heard over the past few days.
What do we think of the Wall Street Journal report going into the weekend? Isn't it problematic now that markets believe the signal in everything they write over there?
Hold on a second.
They believe that he's the Fed whisperer.
You're saying they. You're talking about Nick Timiraos.
Yeah, and fair play to him that he's got that connection at the Federal Reserve. But I think it's hugely problematic now that you can write an article going into the quiet period, which is just basically some select quotes from Fed speakers already on the record, and people believe there's something more to it. There's something happening. There's some signal, a sign.
Well, that they want to have some certain emphasis heading into the Fed meeting. But this really highlights attention for the Fed. How do they signal that they are willing to look at the data showing a slowdown in the economy, that they are willing to be sensitive to the lag time that it takes for some of these rate hikes to bleed into the economy, while also convincing markets to stay suppressed, for financial conditions to stay tight?
How many times have we done this year? We've had the pivot, the pause, and now the step down. This is about the step down.
What the step down?
The step, it's now about the step down. We'll talk about the step down in a moment.
We're stepping down.
Are we talking about the Yankees at all? Spurs? Are we covering any of that this morning whatsoever?
No, it's been fun.
Blanket statement. Now or never.
I'm just wondering, does New York now support Philadelphia?
Should Conte step down?
That's rough. I don't think so.
That's not going to happen.
I think that's a little too close to home.
should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
When U.S. inflation numbers are released,
The score is inflation won, Fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out.
Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Coming off the back of the biggest weekly gain on the S&P 500 going back to June. What a run, what a move to close out the week last week. Futures this morning, just about positive on the S&P. Futures shaping up as follows, up 0.2%. Big week for the NASDAQ. Bramo went through the earnings. Coming up a little bit later this week, you'll hear from Apple and Amazon and a whole lot more. Equity futures on the NASDAQ basically unchanged. In the bond market, 2s, 10s and 30s. The intraday range on a 2-year Friday. 445 at the lows, 463 at the highs. Just wild stuff. In the 10-year part of the curve, the 10-year maturity, 417.71 on a 10-year, yields in 3 or 4 basis points. But as we've covered repeatedly, week after week over the last 12 weeks, 12 consecutive weeks, yields have been climbing on a 10-year maturity. Phenomenal stuff. Want to finish on the FX market, dollar yen. Here's a snapshot of a bonfire of FX reserves. This is what it looks like, Tom. Dollar yen, 149.34. What a move we've seen again on the Japanese currency.
There is.
The BOJ can't buy the stability. And can I give a shout out to our next guest, Tom, who came on the program back in February, 115 on dollar yen. He said 150, and I almost fell out my chair laughing. And here we are, TK.
Here we are. Christopher Rohn, smarter than the average bear on that macro strategy strategist at Strategas. Is a Baird company. All I can say, John, is show me any literature that shows unilateral intervention works. It's not out there. Christopher Rohn, what is out there is a desire for catharsis, a VIX of 40 and the 8 other shades of it as well. It's not out there, but what element of the market last week gave you a sense of catharsis?
Well, what I thought was most interesting about last week, it was a good week for stocks, but what led? What's the only sector
to me the real yield
new relative high versus the S&P was energy. Energy still leads, and this is what's really interesting. On both down weeks and up weeks, your leadership really hasn't moved much. So I think, if you look at where the positioning still is, and I would contend there's still a lot of positioning at, quote, the top of the market, the Apples and the Teslas and the Microsofts. Energy outperforming doesn't